All right, good morning. Good morning. We're live. We're live. Do a quick check here, guys. Like everything's working. I hope you all had a nice weekend. I'm still sick. The COVID, I don't know. I guess it's going away slowly, but just utterly exhausted. Not used to being this tired. Resting as much as I can, guys, and we'll just continue to take it day by day. Can't tell you how much I'm aching to get back to being able to watch the charts, basically around the clock like I usually do because I love doing it. Then I love making money and trading is a lot of fun. So COVID just sucks. Do my best to get through in the next couple of days. Just keep resting, keep drinking coffee with cocoa. And yeah. Anyways, that's neither here nor there. Just so you know, I keep repeating it so you realize that I don't always sound like a boring, hi, welcome to the stream. It's just because I'm so tired and so sick. I look forward to having my energy back, and we will get there. All right, so let's go ahead here and do our check. Basically for the week, for elite members, I posted it in the members area. You've got my weekly forecast video. You know what to expect. Basically, we've got quite a divergence right now between stocks and rates. So we're going to have to see. I think stocks will catch down. I think we've got a lot of resistance now this week. I think we're ready to give back some, and it could start today. Just the fact that we closed the way we did on Friday here, I'm going to show you. Here's the ES, you guys. This is the daily chart. And just the fact that we closed still relatively inside the daily range. And with OMA, you've got some really clear signs of a potential, very strong resistance up in here. You've got this. We could see a move like this today. It's possible, especially with what we're seeing in rates. That's really the kicker. So when we look at, let's look at the NASDAQ as well before we jump on over to rates. So right now I'm slightly bearish to start the week, but doesn't mean we won't push higher. It just means that rates, spiked on Friday. They don't look to be easing off yet. We've got a strong dollar as well. So it's going to be harder and harder for stocks to push higher in this environment. Doesn't mean they can't. It just means that probabilistically, the higher rates, the stronger dollar should weigh on stocks, because we're not really, toward the end of last week, I was wondering, are we shifting the regime into some sort of a safety trade with money moving into bonds? That doesn't appear to be the case now, because obviously bonds got shellacked on Friday after that NFP number, and rates skyrocketed. So I think that we're still in the same regime where, as bonds drop, rates rise, strong dollar, that's going to weigh on the stock market. It's going to weigh on metals. We should have some great opportunities shorting metals today. So we'll see how much attention we even pay to the indices, because I think metals is going to be where the money is made today with the strong dollar and the rising rates. So here's NASDAQ, not looking quite as bearish as the ES, but still, it's going to be a choppy day on indices today. And we're waiting to see when they're going to respond to these higher rates and the stronger dollar. So indices, we will keep an eye on. We want to know what they're doing. Friday was really remarkable how they recovered after that NFP number and just pushed higher as bonds were dropping all day. Rates were pushing higher all day. But sometimes that'll happen, and that's just the way it goes. Nothing is, the correlations aren't perfect every day. You've got to constantly, be up to speed on what's going on. So let's go ahead and look at the 10-year Treasury note. You just got to bear with me, you guys. I'm extremely tired. So it's basically like I'm trading with half my brain tied behind my back these last couple of weeks with this COVID. So just bear with me. We're still kicking ass, obviously, but it's going to be nice to have my entire brain back. So here you can see the 10-year Treasury note. I mean, we're most likely headed down here. So it's going to be under pressure all day, it looks like, which means rates are going to be pushing higher all day, which means I think stocks are going to have a rough day, especially metals and the dollar. So those are going to be a primary focus from the short side, but also bonds. These are the 10 years. Go ahead and just jump over to the ultra bonds, since, that would be the one we actually traded. Yeah, so the ultra bonds, I think we're headed back down to these lows down here. Stocks aren't going to like that. So we'll look to play the short side on bonds. Very, very careful from the long side on bonds today. So guys, stocks, just I'm recapping as I'm going here. With the indices, be very, very careful. It's going to continue to be super volatile, and it's kind of anybody's guess if they're going to continue to defy the rest of the market and squeeze a little higher. Even if they do, it's going to be a choppy squeeze. Like on Friday afternoon, the NASDAQ, as it was just kind of gingerly pushing higher, you know, had about a 100-point correction in 2 minutes. So these are the types of things that you got to be aware of, right? These, you want to know where the danger is and stay away from the danger. The easy money today, easy money, guys. Trading is never easy. I'm not one of these idiots out there on YouTube that says trading is easy and you're going to make, you know, $5 million tomorrow. No, but the easy pickings for today, the lowest hanging fruit, should be to short bonds and short metals, especially if the dollar remains strong, right? And if we see any good setups on stocks, obviously, you know, we're not opposed to that. But the easy money, the easiest, the lowest hanging fruit is going to be in bonds and metals. Okay, let's go ahead and look at gold. And when I say metals, you know, really silver, copper, platinum, gold we will take sometimes, but you know, gold's a little more choppy. So here you can see the weekly chart on gold, looking a lot like bonds. We're probably headed back down to these lows. That's kind of what I thought. You know, I kept talking about this last week. I said, you know, we've got such an enormous amount of OMA resistance up here, and you know, ultimately we see what happens. It held, and now we're looking to exit congestion here on the daily chart for gold to the downside. It looks like what we're seeing in bonds as well. So guys, these are the markets we want to focus on this week. Let all the other YouTube channels who don't know what's going on with all this, let them, you know, trade the indices, and good luck to you. But NASDAQ's going to be brutal today. I can already tell you, so just stay away from it. It's just better to trade the, and guys, just because we trade the markets that are, you know, more clear, still doesn't mean you have a 100% hit rate. You know, some people say like, well, do you never take losses? No, obviously. I took on that challenge account after the news release, when I lost $1,800 on that challenge account, you know, that was kind of a fun little Bucket Fridays COVID trade. But that's what happens when you get a non-farm payroll number that comes out, you know, just smashing expectations. It's going to blow through levels. Thankfully, I recovered that $1,800 and finished the day plus $1,000. So I had a $2,800 recovery on that account. So no big deal. And I have the luxury of being able to take risks like that because I know with Owings market analysis, I can always just, you know, step back, take a breather, wait for the next edge, take it, and you know, things work out. So that's nice. All right, well, here's silver, guys. Silver, I think we're headed down here today. 22, maybe not today, but the next couple of days, 22, below 22. So we need to look to short rallies on silver. Look at copper and platinum. So copper is also looking very bearish on the monthly chart, you guys. Very bearish here. Weekly, any pops up into 3.85 need to be sold. Guys, we need to sell metals today, okay? That's the bottom line. If they pop and the dollar keeps catching a bid and bonds are under pressure, the game plan for today and probably the rest of the week is just wait for decent pops on bonds and metals and then get short, right? That's the game plan until the scoreboard changes. We have some great patterns on OMA. We've got, you know, the correlations in the market are also supporting this thesis that we want to short bonds and short metals. So that's going to be basically the game plan, and just patiently wait for the market to come to us. Where we're at, you know, as soon as I can get out of this COVID, I can get back to printing money. It would be nice. Guys, I trade because I love trading, and money is nice, but it's more like the chess game of trading that makes it so much fun for me. So when I have COVID like this and I'm sick, it's not the money that I miss out on. It's obviously I like the money, but it's more just, oh, I can't play the game. You know, like imagine loving basketball and you've got a broken leg and you just can't go out on the court. That's how I feel right now with this COVID. I'm so tired. I can't wait till I'm just feeling 100% again so I can get back to playing the game that I love so much. All right, so let's see here. Let's go ahead and switch on over. We're going to do something a little bit different today. What we're going to do, oh, by the way, I am going to, the price on the course at owingstrading.com is going to get raised. I said probably the weekend. I'm going to leave it. The next sale that comes through, the next person that buys the course at the current price, I'm going to leave it there until that happens. And then the next purchase, I'm just going to raise it after that. So, and I'm doing that again because I don't have as much time to mentor people. So I've got to kind of keep the bar to entry higher as I get more and more people in, because unlike other teachers out there, I actually give a shit about my students, and I want you guys to succeed because we're creating a community that's beneficial for all of us. It's, you know, I'm doing this for you guys, but I'm also doing it for me, because the more of you that I can teach my edge to, and we have in our tight-knit elite members community, like Steve and I in there now, he's alerting me to stuff that sometimes I don't see because I'm with my family or whatever. I can't tell you how nice that is to have people who know my setups alerting me to my setups when I'm not in front of the screen. So, you know, your success is my success. We're all, you know, in this together, you guys. That's not like my motivation behind everything is I want the community. We all help each other out. And we've got a fantastic edge. I mean, absolutely incredible. So that's just the rationale behind that. I want to bring that to your attention. So don't be surprised if you see the price go up this week. It's not because I'm being a dick. It's because I've already taken in as many as I can handle at that first introductory price, and then it goes up. So that's that. Okay, I'm looking at some of the other charts here. So we've got our thesis for the week. I posted the longer form video inside the members area. So you guys have that, but we've given a nice little summary of what we're expecting here on YouTube. Let's go ahead and take a look. So basically what we're going to do today, that's going to be a little bit more fun. We don't have any, I think we have ISM services coming out at 10 a.m. today. So we've got some news, but nothing major, I don't think. We'll check the feed here in a second. But what we're going to do today that I think is going to make it a lot more fun and just give a bit more accuracy for the entries that I like is, you know, when I trade individual markets for myself, I oftentimes trade on volume-based charts because they're just, in my view, they're way more accurate than time-based charts. So we're still going to use the hourly chart here. I've got the 4-hourly and all that other stuff on other screens. You guys don't need to worry about that. You focus on the hourly here. We'll keep an eye on the broader markets, what's going on. And then once we dial in on a market that we want to trade, let's say we want to trade, you know, let's say silver is bouncing, right? So silver, my area, you know, where I'd like to get short. Okay, so that's what I'm waiting for on silver. And obviously it happens at fucking 7 a.m. when I'm not in front of the charts, but this is just the way it goes, guys. This is what I'm waiting for. This kind of a pop, you short, you drop. But we're going to see this today with the dollar catching a bid and rates rising, bonds dropping. So when you get that kind of a pullback, you know, then I'm going to turn my attention over here to the volume-based chart for silver, because this is going to just give us much better reads in terms of, you know, where to enter, where to put stops, where to take profits. So I'll teach you guys how to start using the intraday volume-based charts. We're also going to start using these levels for our stock market opening range trade and all these. You just get so much, the levels you get with OMA on volume-based charts is just, it's insanely accurate. On hourly charts, it's really good too. But if you really want to dial down, the volume charts are fantastic. So we're going to start incorporating those. I've been debating on whether or not to incorporate them in the live stream because it's kind of hard when you're following so many markets. You know, how do you shift and bring a different volume-based chart for each market, because they all have different counts depending on how many, you know, shares or how many contracts trade each day. Anyway, so I've got them all set up on my other screens here, so we'll just bring them over when we feel they're relevant. But here's the hourly chart in silver. You can see this is what you're waiting for, right? Trending down, pop, short, drop. This is what you want. This is what we're gonna wait for. All right, so I hope that makes sense. And yeah, let's just cycle through the hourly charts here. We got about 15 minutes to go. We'll see what's shaking. Again, indices, we're just going to exercise caution. You know, ES, you've got a lot of resistance here. These are the daily levels, by the way. So I put the daily levels on here. So you can see over here on the daily ES chart, you see that trend line right there, that yellow dot that we get by connecting those lows. That's resistance right now, right at the envelope top in green, right? So that's why we've got those levels. We've got the daily envelope top here in green coming across, and then that trend line is these yellow dots coming across here. This is our daily resistance level on ES that we can see very clearly now when we overlay it on the hourly chart. Now, does this mean we're going to short this? No, it doesn't mean we're going to short it. It just means that when those levels are levels that we want to act on, then they're really nice and convenient to have there on the chart in front of us. So You know, again, ES, like I said, stocks should drop today based on what we're seeing in the dollar and bonds. But I mean, why do I want to hang out and you know, try and find out if stocks are going to drop? I know metals are going to drop because they're already dropping, and they always drop when you get a strong dollar, weaker bonds, higher rates. So just go for the markets that are already doing what they're, you know, they're already kind of behaving the way they should be behaving based on the correlation. So that's really important. Hey, Steve. Good morning. Hope you had a good weekend. You can rewind and catch up. I'm still really sick. Unfortunately, I haven't been this sick, I don't think, in my adult life ever. Just having a rough go of it, but going to continue to try and push through. I'm just completely and utterly exhausted. So. And all I did was rest over the whole weekend, sleep, and like it. I haven't left the house in 10 days. I'm quarantining, I'm sleeping, I'm taking care of myself. I just can't shake this fucking thing. So, but it'll get better. But I'm going to be a little grumpy, in all fairness. Anyways, just if you got here late, just rewind and catch up on double speed, because I just don't have the energy to repeat things today like I normally do. But I hope you had a good weekend, my friend. And hey, how about that trend line? NASDAQ 17,776 again on Friday afternoon. Like, man, if I didn't have this COVID, I would have been all over shorting that. It's like, those are the things I'm like, whoa. Anyways, that was another great opportunity to make some serious cash on the NASDAQ. I'll show you guys if you didn't catch the video over the weekend. But we were talking about this in the elite members area on Friday as the NASDAQ was firing up here, right? It was firing up here. And then as it was getting higher, like, okay, where are we headed? Well, we're headed to 1770.76. That's our yearly trend line for OMA. Fair enough. That's literally exactly where it stopped again, like almost to the point, and then just rolled over. I didn't short it again because I was in bed with this freaking illness. But had I not been in bed, you can pretty rest assured I would have shorted the shit out of this. Because the reason too, guys, you'll see this over time. Like, I already nailed this trend line like a week ago. You'll see when you get in sync with the markets, when it comes back to a level that you already know and you love, and you already know exactly how the market responded to it last time, and you got an enormous amount of confidence in that level and how the market's going to respond to it again, what that does to your confidence on those trades, you can go much bigger size with a lot more confidence. And that's the thing that I was so bummed about when I saw the NASDAQ, you know, the next morning. Like, oh man, I know I would have gone big size on that. So anyways, just keep that in mind when you get really familiar, especially with these yearly, quarterly levels that we call out. Sometimes the market just wants to come up to them 3 or 4 times before finally rolling over or breaking through. And you can just get amazing trading opportunities. Don't worry, we're going to have plenty all year, obviously. But that was nice to see the NASDAQ respond to that again. All right, so let's do our check here. Okay, so again, we're going to be looking at the hourly chart here with the daily overlay. We'll bring in the volume-based charts when we need to like dial down. Because this is the thing. When the market starts to trend, you know, let's take just one last thing, guys, because I'm kind of bringing you up to speed on what we're doing here, because I want you to understand what we're doing. You can, you know, benefit from it. But here's silver, right? So this is the 4,000 volume-based chart on silver. Well, you know, on Friday, when silver was, you know, firing to the downside, it's just way easier when you're waiting for a pullback here on the volume-based charts. You just get much, much better entries, stop placement, all that kind of good stuff, as opposed to watching a 15-minute chart or a 5-minute chart. I've been keeping an eye on the 15 and the 5, you know, just because it's been easy for organizational purposes when you flop back and forth between so many markets. Because when you go to volume-based charts, you know, like my silver chart here is 4,000 contracts. My ES chart is 80,000 contracts. My NQ is 40,000, right? But now I've got all those different charts on my other screen ready to grab, so we can just flip over to the volume-based chart when we need it. But we'll still focus on the hourly chart as our, you know, main point of focus, just to synchronize the market, see what's happening hour by hour. All right, so what are we doing at the 8 o'clock hourly close? What do we say about indices today? They could go either way. I think they should head down based on, you know, bonds and the dollar, but you know, indices can stay irrational and piss people off a lot longer than they can stay solvent. I think, who's that? Jesse Livermore said that. Somebody said that. I don't know. So the question is, are we going to do anything here at 8 o'clock? on ES or NQ or any of these? No, because it's pre-market, and I generally speaking want to stay away from these today. So we'll just keep that in mind. Take a look at the Dow anyways and the Russell. Basically what I'd be looking for today, that's not a bad example there on the Dow. You see how you kind of, it pokes its head up there. It's an exhaust. You got kind of like a nice risk to reward on that trade. There's some resistance up there. So if we get overextended on equities to the upside, that's where I'll be looking to short. But when they're kind of lollygagging around in the range, which I expect to be volatile and difficult to trade today, then we're not going to mess with equities today. Generally speaking, we're going to follow them. If we see anything good, we'll take them. But we know that the lowest hanging fruit today is going to be on bonds and metals because of what we're seeing in rates and the dollar. It's just, there's no 2 cents about it. So, you know, if you've got a pile of $5,000 over here and a pile of $1,000 over here, and it takes equal effort to get either pile, but you can only have one, you should go for the one where you can get $5,000. For us, that pile today is bonds or metals. Okay, so that's what we're going to focus on. So let's go ahead and look at bonds for the 8 o'clock check, which is coming up in 9 minutes, because these are one of our markets of interest. This is the 10-year Treasury note. You can see here on the hourly chart, you know, we're probably headed for this near low. We could be headed all the way down here today for the 10-year. So guys, if the 10-year keeps dropping like this, the move in the 10-year yield from, I think, Thursday to now, it has basically gone. Everybody was excited because we were back below 4%, you know, which is kind of the border where stocks really like it when the yield's below 4%. I think we got down to like 3.8%. Now we're back to like 4.1 or 4.15. It's a massive move in the 10-year yield, guys. And the stocks are going to feel this, but they're not going to like it, which is why it's going to be very volatile. So we just want to wait and get short the 10-year or the 30-year or the ultra bonds. So let's go ahead and look at the 30-year here. And for those of you just joining, bear with me. I've still got this fucking COVID, but we're going to do our best to get through it. I just don't have the same energy as normal, but that's fine. Okay, so here's the 30-year Treasury. Again, we're just waiting for some sort of a pop. So we'll look at our intraday volume-based chart, because that's going to give us much better read on shorting these today, as opposed to looking for levels on the hourly. The volume-based charts are incredibly powerful. So here's the ultra bond. Nice. So just waiting for these to pull back a little. So if you look at the ultra bond, for example, on the daily chart here, you know, is the high of the day in? It could be. It's probably going to be right up in here somewhere. Ideally, I'd like a pop up into 129. We may not get that, right? It may just keep heading lower. And that's why we're going to be a bit more nimble with the volume-based intraday charts. So we'll flop on over to those in a sec after we complete the check. But we want to find the best market to focus on. Let's look at gold between bonds and the metals. We already know we've narrowed it down to bonds and metals. So gold is going to be the same as bonds. You know, for those of you looking to long gold today, be very careful. Gold is going to be severely under pressure with bonds dropping, rates rising, and a strong dollar. We're firmly below 108 now with the euro futures. Okay, so that's been sort of the line in the sand for the US dollar against the euro. Has been that one. We've been ranging between that 108 to 109 level. We're now firmly below 108 at 107.70. Okay, this is why this cocktail of the strong dollar and rising rates probably is going to hit the stock market, but most definitely is going to hit the metals, right? So that's why we're waiting for pops on bonds and the metals. Let's look at silver. All right, so with silver here, it's the same thing. Just waiting for a pop like this. I already mentioned that one. That was at 7 a.m. I don't check the chart at 7, especially when I have COVID. So, but that's kind of what we're waiting for, a pop like that. So let's go ahead and flop over. We'll look at the volume-based charts here in a second, you guys, and I'll show you why. We'll do a little. I'll take you guys through a little bit of the volume charts so you can understand why they are superior to minute-based charts. And don't get me wrong, OMA works on everything. So you want to use it on an hourly, a 4-hourly, knock yourself out. The volume-based chart, it just eliminates the variable of time. So it allows the math to function even better. You know, again, why not just, if you have a choice, use the best. The the reason I haven't gone with the volume-based charts before, again, is because it's hard to cycle back and forth between, 20 different volume-based charts, whereas the hourly is the same on every chart, right? It's an hourly for a silver chart, it's hourly for an ES chart, whereas the volume-based charts is different contract amounts for each volume-based chart. So that's, if you're wondering why we haven't done it up to now, but now it's time to do it. All right, so here's copper. Copper as well. Look, guys, see, copper's leading the indices lower. You see, copper's the canary in the coal mine. This is the daily chart. We're trending down here. This is the indices. I don't think they're going to be staying up here very long. We've got some very strong OMA resistance levels. And I noticed as well, I was laying in bed, half dying, like this weekend. I was listening to all these financial news shows, just not because I can learn anything from them, because quite frankly, a lot of them are just not very bright. But I like to hear what they're thinking, right? And everybody is so bullish now. Everybody's bullish, right? That's what I want to see. That makes my bias of wanting to go short even stronger. I'm not always a contrarian. I'm not a perma this or a perma that. But right now, especially with what we're seeing on the charts, what we're seeing with the 10-year yield and the dollar, and then all these people are just getting super bullish right now, have fun with that. And quite frankly, it doesn't even matter what stocks do today, because again, we're going to be shorting bonds and shorting metals. But you just love to see all that bullishness out there. The stocks shrugged off that NFP number like nothing. Yeah, stocks did. But did you see how they closed? That's pretty telling. All right, so here's platinum. This is good. So platinum we want to short as well. It just may give us a little bit more of a bounce. We'll take a look at platinum here in a sec. Let's look at crude, guys. I don't know if we covered crude, but I looked here. Let's look at the monthly, weekly, daily for crude. Here's crude daily chart to the far right, weekly in the middle, monthly. Sorry, here. Let me bring up crude right here. Boom. All right. Okay, so crude. I think crude is going to continue to be. Crude's tough to read right now. It's just a lot of conflicting forces, and I think it's best to exercise caution on crude today. Probably going to get hit with the higher rates, stronger dollar. If stocks start dropping, then look out below for crude. And the fact that crude just cannot hold on to a rally when half the Middle East is on fire is incredible to me. So that to me is also crude, like copper, are telling us there are some deep problems in the economy. We're heading into recession, and there's already a ton of other reasons why we're heading into recession. You had the uninversion of the yield curve. That's usually when the recession is about to start. There's a whole other slew of things we could go over. We covered some of it Friday. We can do that when we have more time. But crude and copper are signaling recession here, which is also why stocks, I think, are going to be in trouble. So here you guys, let's look at the Euro US. So here you can see the dollar is getting stronger. As this chart heads down, the dollar is gaining ground against the euro. And on the monthly, the weekly, and the daily charts, it doesn't look like that's going to stop. It looks like we've kind of opened up the gates to the downside, which means, the picture for metals and bonds to be shorted should be accurate. And then stocks as well. Look, if stocks start to break hard and fast to the downside, obviously we're going to, look to short them as well. I'm going to wait for stocks to tell me that they're responding to higher rates and a stronger dollar, whereas bonds and then metals are already responding. So just take the market where it's already telling you, it's already tipping you off to what's going on. All right, so now let's look at some volume-based charts, and we'll do this for the Ultra Bond is one we like to trade. So here's the Ultra Bond, and you guys, how I arrive at these numbers for the volume-based charts. Okay, so the Ultra Bond, you can see here, this is a 20,000. You can always see the number up here. Okay, I don't know how clear it's coming across for you guys, but right there you can see 20,000. That just means that each one of these price bars is calculated off of 20,000 contracts traded for the Ultra Bond, right? So we're eliminating the variable of time, because time doesn't really matter, right? It's volume, it's contracts traded. That's why we're plotting this. So I take 20,000 contracts just because that kind of gives me something similar to an hourly chart, you know, duration wise, right? I don't want anything. If you do 5,000 contract, it's going to move too fast. If you do 40,000, it's going to be too slow, right? You want to find the sweet spot. So, you know, I've been trading with volume-based charts for many years, and I kind of have the sweet spot that I like for each market. And it's a formula. It's a rough formula I use based on the daily volume. You know, it's typically, and this is not a hard and fast rule, but it's around, you know, anywhere between 5 or 10% of the daily volume, like 5 to 7% of the daily volume, depending on the market itself, because each market is different too. So we know we want to short bonds and metal, right? So right here with ultra bonds, you know, screaming to the downside here, right? You know, do I want to short right here, right now? No, we might continue to go down, but you know, I need to wait for some sort of a pop. So I'd be interested in, you know, up in here around 127.28. We'll just, you know, keep an eye on that level for ultra bonds. But let's also look at, you know, platinum, silver, copper. Let's go ahead and jump on over here to silver. Right there. Okay. So with silver, let me just bring this up here. With silver, I use the 4,000 volume chart. It's just kind of a nice number for silver. Let's go ahead and see where we're at right now for silver. Yeah, so, you know, silver, you see, this is why it's so nice to use the volume-based charts. You just get a lot more cleanliness to the ebbs and flows of the market, right? So for silver, we'll just be waiting to short. I've got the quant tower now set up nice and easy, so we can just flop back and forth. I got the watch list connected to the DOM, so we can easily switch back and forth. Hopefully, you know, we're not going to have any issues here loading different markets at key moments during the day. I've seen that a lot so far as we're racing through these challenges on our way to, you know, we will reach 6 million in funding with Apex. There's no question about it. But, you know, if you can't get into the market at key points, that's gonna, you know, slow the journey a little bit. And I've caught it live now several times where it's like, you know, a market's dropping, you know, let's say silver. I'm sitting there trying to load the damn silver DOM. It's just like, no, sorry, we're not gonna. There's nothing wrong with the internet, nothing else. So, you know, hopefully we'll not have too many problems with the quant tower rhythmic connection. That's fine. And I'm still deciding, you know, one of the reasons I'm not going huge on the challenge accounts yet, because I'm going to be ultra aggressive, is just because when I have COVID like this, again, you know, my concentration's off, my brain fog is higher than usual. I'm trading with half my brain tied behind my back. So I'm just going, you know, still making money on, I'm doing fine. But, you know, as I start to feel better is when I'm going to start risking, you know, 10 of these 50K challenge accounts on one trade. Like I can tell you for sure, on Friday afternoon, when the NASDAQ hit 1776, our yearly trend line, again, I would have gone all in on all 10 accounts, short for sure, because I had so much confidence in that level, you know, that yearly OMA trend line coming across. There's no question about it. So those are the setups you want to wait for and then be super aggressive. Unfortunately, I was in the bed recovering from this thing that won't go away, but it'll go away at some point. And until it does, I'm going to keep fucking whining because I'm grumpy about it. So it is what it is. Makes me feel better to whine. All right, so here's silver. Again, just kind of, and guys, keep your eyes on the, this is the volume count here, right? So when this gets up to the same height as all this, you know, then you know that that bar there is going to close. So you can see here, we have 3,400 contracts traded, and therefore this is almost at the top because it's based on 4,000 contracts, right? So when that hits 4,000, that closes, we jump over to the next one. I know a lot of you know this, but there are people who don't know it, and I want people to try and understand what's going on here. So there's silver, so just waiting. Let's go ahead and jump on over. Platinum was one that kind of had bounced a little bit already. Platinum. Here's platinum, you guys. So for platinum, I use 1,000 contracts. You know, why do I use 1,000 contracts on platinum? Because, you know, the daily chart on platinum only trades, I forget what it is, but it's a very, very small amount of contracts, right? So if you set a 4,000 contract bar chart on platinum, you're going to be waiting all day for one bar to close, right? Because it doesn't trade that many contracts. All right, so for platinum, yeah, just you'd be surprised, guys, with these volume-based charts. You just patiently wait, and because they're also not like the hourly charts, right? You're waiting for each hour for the hourly to close, and we cycle through all of our markets. We get a sense of what the correlations are, what's happening. But the volume-based charts, what's nice about them, and this is why I changed the banner scrolling across the top of the stream. Hey, check back in before the hour. Well, that's no longer valid because we might take trades at any time because the volume-based charts are not dependent on time. They don't close on the hour. They close when those amount of contracts have traded. So I'm constantly going to keep an eye on these volume-based charts. And when we're following a particular market, like, let's say platinum here, I don't know when, 800 contracts are going to come in, jack this thing to the upside, close my volume-based bar here, and then set up a short for us. That could happen in 7 minutes. That could happen in 9 minutes or 14 minutes. You don't know. So with the volume-based charts, you get a lot of really good signals, and you don't miss them as often because they're all happening at different times based on when the volume is coming into those particular markets. So that's really important. Okay. So with that said, guys, that's the summary for today. That's what we're waiting for. Let's just go ahead and double check the news feed. We got ISM services coming out at 10 a.m. I believe. If I can keep my eyes open and not fall asleep with my COVID narcolepsy until then. So yeah, COVID, ISM at 10. Fucking COVID, man, so pissed off at it. We've got the S&P Global Composite. That's pretty wild. That's at 9:45. 9:30. We got the Canadian Composite. That's fine. Okay, yeah. So really nothing at 8:30, guys. It's 9:45 and 10 a.m. You got ISM. We do have some big treasury auctions later this week. I know off the top of my head. I'll have to, not today, but we'll have to keep our eyes out for those because those will move the market. And as long as I can get better from COVID, those auctions usually happen at 1 in the afternoon. So we'll stream those live because they're a lot of fun to trade and you can make a lot of money. They're kind of like little FOMC meetings. All right. So just got a cough. All right. Yeah, Steve asks, are volume-based charts similar to tick charts? Yeah, they are, but instead of calculating based on each tick, they're actually doing it on each contract traded. They're both more or less the same. I just use, some people like ticks better because you can get a slightly better read on the volume based on the ticks. I don't see a huge difference between ticks and volume-based, so I just use the volume-based chart because then I know, for example, when I'm looking at, let's say, let's bring over ES here, right? So this is ES. I use the 80,000 contracts on this one, right? So I like volume because, when down here, when I'm waiting for these to close, I know exactly that when this hits 80,000, that bar is getting ready to close, right? So I can plan in advance based on the pattern I'm seeing setting up, and I can know exactly when that's going to close at 80,000 contracts. Whereas a tick chart, you just don't know. You can set it to like, it's easier to plan with the volume. I can't explain it, but I've done a lot of experimenting with both, and I guess it comes down to personal preference. I think where the tick charts would be advantageous are for those of you who love to scalp. Then yeah, absolutely. If you were going to get way down on a 1,000 tick chart for ES using OMA, and if you're a good scalper, I'm not going to say that because scalping is very hard, and that's why I don't recommend it. But if you're already a good scalper and you apply OMA, setups and everything to scalping on a 1,000 tick chart, I have no doubts that you do very, very well. And that's where I'd recommend using a tick chart because then you'd get to see the subtle differences in volume, right? Because then you'll see on those tick charts, some will have, volume increases, but the same amount of ticks. That just tells you that those are slightly bigger traders, although you don't really get the same tip off anymore because of all the algos that are active. And even all the big traders, they're splitting up their orders now. People who have 100 or 500 ES to move, a lot of those are bigger institutions that they're running it on bots, right? So they're not necessarily using the bot to trade, but They already have their game plan for the day, and then they'll go ahead and just tell the bot, execute 1,000 shares of ES, but do it in, 5-share increments. So nobody's coming in anymore with very rarely with huge order blocks. That's why I think the tick charts are slightly less advantageous, in the current environment. All right. I hope that answers your question, Steve. And we're just going to use them just to, just gives me a better read in terms of what's going on, in terms of the levels and the stops. All right, so let's flop back through here. We'll continue to go through. So right now, you see we got the game plan. I want to short bonds. I want to short some metals. Right now, they're screaming to the downside. I'm just not the type of person that jumps in on momentum. Sometimes that means I miss things, but oftentimes it means I'm in a much better position when the market pulls back to enter the trade at the correct place, right? So here we have, you've got a lot of resistance here on ES. This is ES, but I'm still waiting to see if, we've got some very strong Owings market analysis patterns and trend lines and just different combinations of things coming in on the weekly chart and the daily chart here. So I'm waiting to see some selling, and then I will know, because I think a lot of people could be caught off guard right now, and I'm waiting until those people are caught off guard potentially, and the party gets started to the downside, because it's just much easier rather than guessing, hey, well, market should go down from here. Let's just wait for the market to tell us, because on ES today, here's the daily chart for ES. If this market starts to crack, which I think there's a chance it could, again, based on rates and everything else, then, we could head back down to these lows here. We could, right? So if we do that, that could potentially be a move from 49.80 down to 48.80. We could have a 70-80 handle move today, especially because, guys, you got to look at the correlate. Why I don't have time to go into a lot of the details on why I use OMA primarily for everything. And then I'm also looking at macro, what's going on, right? So one of the other things I look at, in terms of the bigger picture, what's VIX doing right now, right? Well, if you look at the historical correlation between VIX and the 10-year yield, right? When the 10-year yield has these sharp increases like we've seen right now, VIX will also have sharp increases, right? And when VIX has sharp increases, the indices don't like that, right? So right now, VIX is in the process of, pushing higher with the 10-year yield. And that's what I think with a stronger dollar is going to weigh on the indices. But if we're going to see that snap to the downside, we're going to have plenty of time to get short all day. So you don't need to short here right now and be in fear of missing anything. It might start dropping from here, but I want to let it confirm first. Let's just go ahead and look at this. Look at the difference, guys. This is what's really cool about the volume-based charts is see how on the volume-based chart, you see how you've already trended down here on ES from 49.96 on Thursday afternoon down to 49.68. And now, we're trying to push higher. So, using OMA, I can already see based on this pattern down here and all this, this is not a place. It might drop, but it's just not a place where you want to get short. And the volume-based charts, with everything that I know and everything I teach in the course and everything else, the volume-based charts just make it so clear. Whereas the hourly chart right now, looking at this, might say to myself, okay, you're in congestion. There could be some resistance here. We're not shorting. We already talked about why. But if you were tempted to short, looking at the volume-based chart gives you a very clear indication of no, don't short. So I think that the volume charts are just going to take everything to a whole new level for this channel. Once you guys start to understand how we use them, you're going to be amazed. It really is phenomenal. So for silver, I'm just keeping an eye on everything. The ones I love to short today, any of the metals, really, bonds. We just got to stay patient and wait for the market to come to us. I kind of had this sense last night. Again, back to COVID. I was just so tired. I didn't have the energy to stay awake till midnight here. which is when the market reopens here at 11 p.m. in Sweden. But I had the hunch, that bonds were going to continue to follow through to the downside from Friday afternoon. And that's basically what they've been doing. So you can see here, this is the ultra bond, guys, hourly chart. And I'll keep repeating until you guys get used to it, like when we're on the hourly chart, when we're on a volume-based chart. But here's the hourly bonds, right? So you see how we opened here. This is what I wanted to short last night at the open, but again, I was just too exhausted. And now we're just kind of trending down. So oftentimes, you just don't know, but oftentimes you'll just get, if you're just patient, you'll get something like this. That's where you short, and then it'll resume. You gotta wait for the right point to short, like down in here to short here. I think it's just a bit more risky, because if we're right at daily support right now. Look at the daily chart, you guys. You see the daily chart here. This is the ultra bond again. We're right at the support right now. We appear to be breaking it, but if we really start to break through this support, guys, like, we don't need to worry about missing. You never need to have FOMO, never, because the market works with chain reactions, right? So if you're worried about missing, let's say, I'm going to walk you through the thought process, right? Let's say the average trader would take the information I've just given, which says, hey guys, bonds are heading south, yields are spiking, strong dollar. So we want to look to short metals, we want to look to short bonds. So they'd look at this right here and be like, all right, we want to short. Well, let's get short. And I'm like, I'm kind of a party pooper. I'm like, no, we're going to wait till we get the right pullback to the right resistance level. And people get FOMO. They want to jump in now because it's dropping without them, right? But back to the market having chain reactions. If bonds start to break through this key support level, which they might, just because we're not on board the bonds, that's going to funnel over, to probably the indices. They'll start to drop. You'll get your opportunity over there. You can just wait for the right opportunity at the right price level to come to you. You get a couple of those a day, you're doing awesome, right? And you're staying out of all the other, subpar trades where you're chasing and getting FOMO and all that kind of crap. So, just keep that in mind, because I think that's one of the biggest problems people have when they start trading. And I know, because obviously I had those problems too, is it's not easy to not have FOMO, and I'm trying to teach you how to not have FOMO, right? It's just better to let the market come to you. Hope that makes sense. Steve, let me know if you have any more questions. I'm gonna go refill my coffee, guys. So well, you know what, let's we'll wait a few minutes, because the bond market is going to open here, the floor hours. Let's turn our attention back to UB. Whenever I look at the UB chart, ultra bonds, sometimes the band UB40 pops into my head. And then because of UB40 popping into my head, the song Red Red Wine pops into my head. Oh gosh, really funny. All right. Funny how the mind finds connections. Yes, the minds are, recognize patterns. All right, so you can see we're going to get a close on the ultra bonds here in about 3,000 contracts. And we're just waiting here. Then I would look at this, because the bonds can get a little wild, right? When the floor is going to open here, right? So I would kind of treat this like a stock market opening trade. Is there any kind of a level that I would love to get short? I mean, yeah, if it just popped back up to 27 up here, I think that's a pretty low risk trade. You guys see that? That's pretty cool. Look at the quant tower. It actually worked. So when I switched from ES to UB, it just went boom. That's pretty cool. Now the question is, do I want to copy trade today? I'm not in the mental. I think I'm just going to do one account at a time. Maybe just have a little fun with something like I did on Friday until I feel better. But don't worry, you guys will get the analysis and the trade call outs. And for those who feel fresh and ready and healthy, I can go for it. I'm just being a little bit more cautious when I have the exhaustion I'm feeling right now. It's like, when you take an international flight and you're up for like 3 straight days. That's how I feel like when I wake up from 10 hours of sleep. I feel like that. which is why I'm not like being crazy aggressive on the challenges right now. That's my only reason for whining about it and telling you guys. And plus, it's nice to be grumpy. All right. So, not doing anything right now. I don't think it's like, if this thing was to punch up here to 27, I'm not going to take it because there are better trades to wait for. But for somebody like Steve, who's like the maestro when it comes to entries, I always like to point these things out to Steve. All right, so guys, I'm just going to refill my coffee and I'll be right back. We've laid a good foundation for the day. I have a very strong sense that we're going to kick major ass this entire week. At least I know you guys will. My ass kicking, the degree of my ass kicking is dependent on my health, so it'll be what it's going to be. But looking at ultra bonds, guys, you just got to love what you're seeing here. Look at this. I mean, this is the weekly chart. We should be able to short ultra bonds all week. I think stocks too. I think stocks are going to have a bad week. You can put me on the record. Now let's see what happens. Obviously, if the Fed comes in and starts buying a bunch of debt, dollar drops, dollar gets weaker, the 10-year yield gets back below 4%. Yeah, okay, then maybe stocks can push a little higher. But under this current environment we're seeing, stocks are not going to have a good week, is what the charts are saying on OMA and also the asset correlations. That's important. All right, I'll be right back. I got to get some coffee. So you guys just keep an eye here on the ultra bonds. All right, guys. So, waiting for the market to come to us. All we can do, you guys. I guess I'll just turn on the copy trader today because I'm not going to trade super aggressively, I don't think. I don't know. I still gotta wait and see. So let's take a look at ES. Oh yeah, there goes ES. Okay. So even with that, what we were seeing on the all right, because it closed. So here's the ES. Still wouldn't do anything down here, but it just want to wait for a little bit of a pop. Steve, you got any questions? Can you put your vol chart into the elite area sometime? Yeah. As soon as I'm back to myself again, which at this point I don't know when that's going to be because I'm shocked it's taking this long. Like I said, I haven't been this sick in my entire adult life, so I don't know what's going on. It's some sort of weird viral thing that's connected to the COVID or something. But as soon as I feel better, yeah, I'll there's a lot of extra material I want to put in the elite section. I want to put some videos in there for how you guys can set up your Sierra charts. I'll put the volume-based charts in there. I'm having all the indicators made now for TradingView and Quant Tower. So once they're made for Quant Tower, I can even probably just trade directly from the charts on the Quant Tower. So a lot of cool stuff coming for OMA for sure. Just like my whole life has been put on hold these last 2 weeks. I'm just holding it together, even just to stream for a couple hours because I want to, we just launched the stream. I want to keep the consistency going. But otherwise, my health is just kind of dragging things on for right now. But I'm usually an extremely healthy person. So this is why you don't want to put a Californian in Sweden where it's dark and you don't get vitamin D all winter. Yeah, exactly. Yeah, it takes time. I'm pretty fucking sick of it right now. I'm not the kind of person that likes my progress slowed down. So when it's just the COVID's punching me in the face, I'm just like, I just fight back against it. But you just get so tired, you can't do anything. I feel like I'm drugged. That's fine. I don't want to fucking talk about my COVID all day. And it gets annoying. All right, so it's 8:32. Go ahead and just cycle through here. Basically, we're only going to bring over the volume-based charts when we're, really in an area where we're going to start trading, because the hourly charts are a lot easier to just kind of cycle through and keep an eye on, right? So the NASDAQ. Dow. Russell. Ten-year. And we'll just stay patient and wait for our trades to come to us. And normally, when I'm feeling better and we're waiting for trades, I have a lot more energy to teach and talk, and we can go over a lot of fun stuff. It's just that right now I just have to conserve my energy for the trading. So here's the 10-year. Yeah, just waiting for a little bit of a bounce. Look at the 30-year. She wants me to explain my charts. It looks foreign. Can you tell me, can you give me a little bit of info on what you mean? Like, what looks foreign to you? Does my indicators look foreign, or like this is just an hourly chart here. So, you know, each one of these black bars is an hourly price bar, right? So that's 1 hour. That's an hour. So probably normally, you know, you would be used to seeing, you know, this hourly chart like this. You know, you'd see really thin candlesticks probably, right? And then you would see, you know, you'd see an hourly chart like, you know, probably like, you know, like similar to that, right? Whereas with mine, I'm really just, yeah, you're used to candlesticks. Okay, yeah. So on the, yeah, okay, thanks. That gives me a better idea of where you're coming from. So I'll try and explain it. So here, just imagine what you're used to, just bringing up a chart here. Right, so most people with their candlesticks, I guess, you know, let's just say this is an hourly chart, right? It's a 1 minute, but that doesn't matter. Just say it's an hourly chart candlestick, right? You'd be looking at, you know, a lot of data on your hourly candlestick chart, and I guess you'd be making decisions on double tops and things like that, right? So for me, you know, what we're looking at is, imagine if this is an hourly chart here, we are looking at, you know, this period of time that's, you know, very recent. So we're looking, actually, we're zooming in like this, and we're looking at each hourly bar very, very zoomed in here. So that's why each one of these hourly bars, and then the volume-based charts is the same thing, except it's based on volume. But then the way Owings market analysis works is that all these dots that you see, first of all, these dots that come across here, these are from the daily chart, right? So these are only right here. You see the daily chart? This is the daily chart. You see how if you connect this low through this low on the daily and extend it out, you get that yellow dot right there, right? So that yellow dot is now transposed here onto the hourly chart. So that's these are daily levels. If you see this blue line coming across, that's a daily level. The green there is the daily level, right? These are daily. It's the same indicators you're seeing here on the hourly, but they're from the daily being, you know, plotted on the hourly chart. I hope that makes sense. And then the dots and lines are just, you know, my proprietary indicators that, you know, I learned and developed from my mentor. I've taken them, I've made them my own. And they're just a series of, you know, different math formulas that give me a very good logical way to read the price action, basically. So based on the combination of where certain dots are at certain times and, you know, what the price action is doing, it gives me a really good read on, you know, not only the direction the market's heading, you know, whether I want to be in favor of shorting or longing, but also where do I want to short or long, what levels need to hold. So I hope that makes sense. And that's, you know, Steve was also, you know, he knew nothing about Owings market analysis until he, you know, took the course and started watching the stream. And then after you know, apply yourself to it a little bit, you really start to understand what all this means. It's kind of like a language, you know, it's you learn to speak the language with a little bit of practice. And then once you learn to speak this language, it just gives you a totally different read on the price action than you're going to get with candlesticks and all this other kind of stuff. And, you know, I learned it from my mentor, and he's a very famous guy. And way back when, you know, I learned it from him in 2000 and like the mid 2000s, early 2000s. And before that, I was also like a candlestick guy, you know, like before 2005, you know, I was a candlestick guy. And then once I discovered this, it made so much sense to me. I was like, oh my God, I don't know how people can even read the market with candlesticks. And that's me. I mean, I've been around this for a long time now, but probably Steve, you can, you know, you've been around it now for a few weeks, and you're coming from candlesticks, so you can tell what you think, because you guys are like Steve. You were very recently a candlestick guy, right? I imagine. I hope that answers your question, Shi. If you have any more questions, let me know. Happy to help. Yeah, exactly, Steve. Yeah, most people do use candlesticks. I think, you know, the thing is that I'm not going to say candlesticks are bad, because obviously you do get phenomenal traders like Tom Hugard or Al Brooks or these types of guys who are, you know, phenomenal traders with candlesticks, no doubt about it, right? But in terms of like a teachable, replicatable process, I think it's very difficult to come up with, you know, candlestick based systems that you can just repeat, rinse and wash again and again and again and again. And I think that's where Owings market analysis is quite different. And you know, that's what drew me to my mentor way back when, is that I've always been kind of like a black sheep type. I was interested in different types of things in my life in general. You know, I've always been interested in what others aren't interested in. And with technical analysis, it was no different. You know, 20 years ago when I started off with candlesticks, I was like, all right, these are all right, but there's got to be something better than this. And that's when I found my mentor. And when I discovered his, you know, methods, I was like, wow, like blown away. And yeah, then over the years, I just kind of further developed it and made it my own. And yeah, I don't know how. So I think you can be profitable with candlesticks, but to have like something that just works again and again, I don't see a lot of people doing that with candlesticks. Unless you're like a Tom Hugard or an Al Brooks, which none of us are. Like, I'm not a Tom Hugard. I'm a good trader. I make money consistently, and I live well and all that good stuff. But I'm a hell of a good analyst using Owings market analysis. And you know, over the years, my goal is just to get better and better at actually trading it, because that's where the rubber meets the road, right? If you could put my analysis of reading the charts with OMA inside Tom Hugard's head, I mean, wow, look out, you know? And my mentor is proof of that, because he's, you know, he was a 9-figure trader. If you don't believe me, you can go figure out who he is and look him up. So this is the kind of stuff you can do with this when you become you first have to become a good analyst. I mean, if you can't read the markets, it's going to be that much more difficult to trade them, right? But once you start reading them and you get confidence in your setups and you have something that's, you know, it's a system. It works through all market conditions because of the way it's designed. You get confidence in that, and then you start trading it better and better and better. And, you know, with more confidence, you go more size. I think a lot of people think that psychology, you know, I talk about this briefly in the course, like, okay, trading psychology. Yeah, trading psychology is a thing, obviously. We all have little issues with psychology from time to time. It's true. But I don't think it's this big, huge thing that everybody makes it. I think it's more connected to people just don't have a system or like a repeatable edge, and they struggle with confidence and consistent results. And they think it's because of their psychology, but it's actually because they just don't have a consistent, repeatable strategy. So obviously that's going to cause an enormous amount of psychological issues if you don't have something you can rely on, you know? I think I heard somebody at SMB Capital talk about that as well. That's always been my sense of it as well. And when I heard the guy at SMB Capital talking about it, I was like, yeah, exactly. This guy knows exactly what I'm talking about. All right, so it's 8:43 a.m. I'm expecting, you know, bonds are headed lower, rates are increasing, dollar's getting even stronger. The VIX is rising because of the, you know, the speed we've seen the 10-year yield increase. I think stocks are going to be in for a pretty rough reversal day and week. If we see this situation on the scoreboard continue, with rates, the dollar, the VIX, stocks are going to be, you know, and then everybody and their mother got so excited about going long after Friday. That's another good reason stocks, you know, could take a big hit today. So I'm excited about shorting stocks once they start to show that they're responding to the higher rates and the stronger dollar. And in the meantime, we're just waiting to short bonds or metals, right? And then crude oil, you know, it's kind of, we'll watch crude, but it's super volatile and not really clear directionally at the moment. The clear directional markets definitely are bonds to the downside, metals to the downside. I think you'd have a hard time fucking up your day if you just waited for good pops on pullbacks on those markets to get short, and just don't chase anything. And I think that's one of the biggest problems people make is like just in such a rush. Like, you know, life is long and beautiful and we have time and we can just wait for our setups, you know? All right. So Steve says, you really don't need the open on higher time frames. On very low time frames, you might. I think where the psychology affects me in the trade management. Yeah, exactly. Psychology can affect in the trade management for sure. There's no question about that. But it gets minimized when you have a system that works, that you can rely on, that you can have confidence in. If you have that, it makes the psychological part like more manageable, for sure. All right, let's get ready for the 9 o'clock check here. We got we'll flop over to our volume-based charts when we're gonna be in trade management mode, but we'll cycle through the hourlies. I'm expecting stocks to drop. This could be the start. Let's see. That would be nice. Look at the NASDAQ. You know, all we have to do is just wait for the hourly here on the NASDAQ to start exiting congestion through, you know, these overnight lows here. You get the overnight lows right there. The Asian session, 17,680. London, you had more support right here, 17,680. Now let's see, triple bottom, opening New York. Everybody's like, oh, there's a triple bottom on my candlesticks. I'm going to buy that. And then hopefully it just smashes straight through. So we'll see. We'll get some good indications, but that's what we're waiting for. Let's look at the 10-year. This will give us a really good idea because yields now are firmly above 4%. So as this thing continues to leak lower, yields are going to continue to push higher. So any attempt today, you can see it very clearly on the charts. We're extremely bearish for the 10-year Treasury notes here in the futures. So any attempt at stemming the tide of rising yields, I think it's going to be met with a massive amount of selling on the 10-year. So we just got to wait for a pop and then we get short. We're waiting for that on the 10-year. It's going to be the same on the 30-year and the ultra bonds. So let's just see where we're at on the ultra bond. Here's ultra bonds continue. Look, I mean, guys, ultra bonds are just in free fall. Beautiful to see. We've been talking about this for so long because of what we're seeing on the quarterly chart right here using OMA. Here's the quarterly chart. So again, each one of these bars now, right? Like guys, just imagine on this chart here that you're looking at, each bar is an hour. On this chart, each bar is 3 months. It's a quarter, right? So look at the quarterly. This is why I've been telling you guys I'm so bearish bonds and bullish rates, and why the stock market is probably just not going to be able to keep going higher, because look at what the rates are doing here. As this chart, ultra bonds, continues to go down, right? Rates continue to push higher because they move. There's an inverse correlation, right? You can see here, we're trending down on the quarterly. Here's your pullback. And bang. I mean, I think we're going back down here, right? And that's an enormous amount of upward pressure on rates that stocks have been, there's been divergence. Stocks been fighting that. Well, that gap is going to be met quickly and violently. And it's probably not going to be bonds catching up to stocks. It's probably going to be stocks catching down to bonds. So, you know, I think the big boys just need to get a lot of people off sides first, which I think based on all the pundits I was listening to over the weekend, I think people will be firmly off sides now. All right, so bonds, we're waiting to get short. Let's look at gold. Gold, same thing. We're waiting to get short. Silver. Trade management. Yeah, exactly. So let me know if you got any more questions. Where are you located, She? I'd like to know where our crowds are coming from. If you're shy and you don't want to tell me, that's fine. Just makes for fun conversation. I think YouTube's pretty cool that, like, I'm here in Sweden, Steve is in Utah. You know, we got some people watching from all over the world. I like that. So here's silver. So we're just kind of waiting. Look at copper. Platinum was, yeah, look at copper, guys. Just falling out of bed here. Let's look at platinum. Okay, so platinum, we did have that spike up there. Could be game for a short potentially here at 9 a.m. You have a nice, you got some resistance here. It's fighting all the other markets right now. Potentially, let's look at crude. All right, and I do have the copy trader on. I got to remember that. There's crude. Yeah, Bitcoin. I got to set up the volume-based charts for Bitcoin and Ethereum as well. They didn't look very clear today on the charts. That's why I'm not really paying that much attention to them today. Okay, let's go back to platinum. That's kind of the one that seems to be bucking the overall trend right now. You can see here, you know, if we're trending up here on platinum, right? So if we want to get short platinum, we're not in a bad area for platinum. I'd like to kind of have us be a little higher up, but it's not a bad area. Dollar strong, you know, bonds are dropping, rates are rising. So I think platinum could be a potentially decent short up into this 908 area, but I'd want to, you know, really it's nicer to be, you know, short from up here because that's kind of where your stop needs to go back there. We're not going to catch them all, but let's, we still got, the way I work on the volume-based charts is the same way I work on the hourly, in that here we have only 410 volume contracts traded. So we've got about 600 contracts left because this is a 1,000 contract chart for platinum. So we'll see where this closes. And if we're trending up here, right? So we're trending up. And if we're going for congestion entrance down, then that could give us a pretty decent resistance level here. Potentially consider shorting into with the stop maybe back there. But we'll wait and see where this closes, because it might be that platinum wants to push a little higher, and it might be that silver and gold and bonds take a little break and push higher. So we'll wait. You know, the good ones jump out. When the good ones are there, it's like, boom, there it is. There's no question about it. For platinum, we'll keep an eye on this. Look at some other charts here real quick. Something tells me just to be a little bit patient. Look at ES. So for ES here, we've got our stock market opening range trade as well, at heading into the open, which today I think is going to be a lot of fun. And we will use our volume-based charts. I guess, what do you guys want to trade then at the open? The NASDAQ or the ES? Take a look. I think ES is just, you know, you can, if you pick the ES right, it's just a bit less noise at the open for the ES. And, you know, you can get a good 10, 15 points sometimes, which is not bad. We'll probably trade the ES at the open. And the question is, are we going to trade anything between now and the open? We're going to check. All right, so here's the hourly ES chart. Let's go ahead and look at our 80,000 contract ES chart here. Guys, this is the same thing. It's a bar chart, but instead of being an hourly bar, it's based on 80,000 contracts. I use different amounts for different markets. So you know, we'll see. What I'd like to see at the open is a push up into the, you know, 49.84, 49.85. Maybe a chance to get short up in there, especially if yields continue. The 10-year yield is continuing to push higher. I mean, guys, dollar's on a freaking tear right now against the euro. So metals and bonds, if we can just get a pop on metals and bonds, stocks. At this point, we're just waiting for a decent pop on anything to get short at a decent price level where we can have some good bang for our buck in terms of the risk reward. So just waiting on that. Let's look at the ultra bond here. Guys, look at ultra bonds just falling out of bed. Just waiting for the opportunity to jump on board. Look at gold. Platinum, we might short, especially, I mean, look at, I think platinum does have a good chance to catch down to everything now. That's why we've got platinum on the quant tower, because we might short platinum soon, or at least take a shot. Here's silver. But we're waiting to short any one of these. Let's look at platinum again. Here's platinum. Yeah, let's bring back platinum here. So on platinum, this is our 1,000 contract chart for platinum. You can see we've got about, down here, we've got, you know, about 400 contracts left here. And that hits 1,000. That bar closes. And the close is very important because with always market analysis, I want to see where it closes in relation to, you know, all my dots and things that tell me what type of trading we're in and what type of trading plan we need to use on this trade potentially. So if we were to close right here, right now, and, you know, the dollar is looking very strong, rates continue to push higher, then what we'd be looking for is a trend reversal. So you see how we're trending up here, and now that trend change. So I have to ask myself, well, is the trend changing so we can stay in congestion here? I don't think so. I think the trend would be changing to potentially reverse to the downside. So then I would bring out my playbook for trend reversal. Let's see if I can find an example for you guys. That would be, you know, something like this. You see, you're trending up here. It heads down. Now, sometimes when it heads down like that, you'll pop back up, right? But I would be looking for something like this. And the question is, I need to wait and see where the close is, because the close in relation to all my formulas is very important. Because that will dictate whether or not the trend reversal is more, you know, in play or not. So wait, we got platinum there on the DOM. Might set an order to short platinum now at 908, just see if I can get lucky on a push back up here, and then if it closes back down here at 905, basically, you know, be in the position, move it to break even. That's again too, my trade management is changing a little bit right now because, you know, we've got the challenges going, right? So you got to kind of take profits a little quicker. But anyways, we'll worry about that. All right, so let's see. Might set an order. I'm interested right now in shorting platinum, potentially up around 908. We look at the hourly chart there. We got a lot of resistance, 906. It may not get up there, so it might just be like right in here. Looking pretty darn weak. I always find these to be the most challenging types of trades, just because if you're going to get in down here somewhere, you know, where do you risk it? You know, I have my playbook. I know where I need to risk it to, but that's why I prefer to take the trades if I'm shorting in resistance or longing in support. Whereas like these that just tend to, you know, right now we're technically in a higher time period support that I think is going to break, right? But anyways, it just makes the the entry a little bit more tricky, but definitely looking to get short here. But the hourly close in 2 minutes, still important because here it's telling us, you know, on the hourly chart, we've got a lot of resistance there at like 905 at the dot zone. And where, I'm just going to quickly look at gold, silver, because where these are closing is also important. Gold's collapsing. Silver. Euro. Yeah, so just it really depends. Are we going to get a bounce in some of the other metals, and that'll kind of keep platinum up there, or is platinum going to catch down? We'll see. Look at platinum here. Here, I'm waiting. I think you've got a lot of resistance now at 906 on platinum. Steve, I just don't know where I want to get in on this. I'm kind of just taking it patiently, but you know OMA as well, so you can do what feels best to you. The reason I'm hesitating here on platinum is just because we're coming out of a little bit more support potentially on the daily. You guys see here the daily, this is a daily platinum chart. You see how we exhausted down here on big volume on the daily? So it just, to me, it means we may want to push a little higher. Now, looking at the strong dollar and bonds falling out of bed, you know, maybe the true average is all we're going to get. But let's just wonder why my hesitation. So I like to wait for, you know, setups that I don't see any flaws with. That's the one flaw I can see in platinum. With that said, I still think it's going to drop. So there's the hourly. Yeah, you're right at. That's the daily envelope bottom. So that's the only reason why I'm like not rushing into this trade right now, is because I think it's going to drop. I just don't really like where it's at on the daily, and that's, you know, really important. So I think for those who want to take a lot of risk today, you know, it's not a bad trade to try and get shorter on 905, 906. But for me, I'm probably just going to wait and see what we got shaken for the open. Definitely here on the volume-based chart, which is going to close in 200 contracts. You are breaking some key levels here, so it should be a lot of resistance here in the 907. But you see, platinum can change quickly. You see right there, just how it really. You gotta. That's why I'm gonna keep an eye on the volume-based chart heading into the close here. We got 110 contracts left. You guys having fun yet? I'm having fun. Platinum's a wild one, but man, you can catch some good trades on platinum sometimes. So see, this is where this is important, guys. See, 900 contracts, 905 have traded. This is a 1,000 contract chart. So when this number hits 1,000, that means 1,000 contracts have traded for that bar, and it will close and jump over to the next bar, which then I will see how did it close relative to my, you know, OMA levels. Because if we were to suck back and close up here above 907, which I think is highly unlikely, but if that did happen, that would change the bearish picture substantially. A beautiful day outside. Lots of people are out for walks. Can't wait till I'm feeling nice and healthy and get out for some walks myself. All right, so we got 70 contracts left. Swedish people are funny. They don't smile very often. Like Americans, you know, if I see somebody, I try and always be friendly and just smile. I smile and they kind of look at me like, why is that guy smiling? What's wrong with that guy? I'll try and get short at like 906. But if it was to fill me and go against me, really even jump up here to like 906.8. Well, no, I think even let's make sure all my orders are in. Range. Let me just flatten this guy. I've got the trade copier running, but it's not really checking something here. Oh, okay. I got stopped. Run. I'm running the quant tower copier. I was wondering why it wasn't. So I think there's a lot of resistance up there about 906. Don't know if it's going to get up there, but platinum looks to be wants to head lower. I think that was the spot to get short on platinum. So the question is, what are we going to see here? You don't really have a pattern like that. It's more, I'm just doing scenario analysis, you guys. Yeah, I mean, I'm probably not going to take this trade. I don't think it's a bad trade by any stretch. I just don't like going against that pocket right there. I think it's going to fail, Steve, but it's still a pretty steep pocket. Although it's really biased, it's still pretty steep. Guys, if you wonder what the hell we're talking about, Steve's taking the course, so he knows what I'm talking about. But I think it's just, there's risk that we could go back up here. And I don't, you know, if I'm going to take a trend reversal trade, Steve, I want to see the pocket opening up more like this here. I'll show you. I want to see this here. How that pocket is opening up more. I don't want to see us coming into this steep pocket here. Just there can be more support there sometimes than you think. So I'm just gonna wait here. We'll turn our attention. We got the stock market opening, guys, in a few minutes. So we know that we want to short everything today. And now let's see if we can find a good spot to short one of the indices at the open, potentially. Go ahead here. All right. Yeah, so there's platinum. I do think platinum is going to head lower. I don't think it's a bad trade. I just think if we're patient today, we're going to find better trades. And, you know, I just want to wait for the better ones. The platinum is probably going to catch down silver and gold and copper. I'm not crazy about, guys, if I see any red flags on trades, I just don't take them. Like, because on platinum right there, I'm not nuts about where we're at in terms of the daily structure. It's not a bad spot, but it's not great. And I didn't really love what I was seeing on the volume-based chart. So then I pass. And don't get stuck in woulda, coulda, shoulda. All right, so here's ES, guys. We're going to prepare for the open. Here's the hourly chart. I think this thing is going to be weak at the open because I think, you know, where's the pain trade at the open? I think the pain trade, I think a lot of people are long up here. So I think the pain trade is going to be down. So I think it's going to go down. So the question is, you know, can we find a good spot to maybe take a short? That's what I'm going to be looking at. Look at the NASDAQ. May want to push a little higher though. So the NASDAQ is definitely looking just a little too bullish, I think. Look at the Dow. Dow's looking nice and bearish. Russ is definitely looking nice and bearish. Sure. So I think if we could get short the Russ at the open, that might not be bad. So guys, we might short the Russ at the open. It looks the weakest for sure, and that makes sense because the Russ is, you know, you got 1.8 trillion in corporate debt that needs to be rolled over this year, and as these rates push higher, ooh, it's going to be painful for these Russell 2000 companies that aren't going to be able to get the refinancing. I mean, 40% of the companies are already not profitable, and that was at corporate, you know, debt rates of 2.8%, which as they roll over this year, they're going to roll over at more than double. So, you know, the Russell's going downtown, and we want to short. So I think the Russell could be a good short at the open. Let's look at the bonds just to do a quick check-in. Bring up the Russ. Boom. Nice. Got the Russ there. So here's the 10-year. Just waiting for a nice pop on the 10-year. Yeah, I'm just looking at the scoreboard you got. Looking good. All right, so let's go back to the Russell. Our good friend, the Russell. Okay. Bring up our volume-based chart for the Russell. Now for the Russell, I like to use about a 10,000 volume. I think that's about right. Let's just double check. Yeah, it's pretty good. It's about 5% of the daily total, more or less. So you can see when we're using the volume-based chart here for the Russell 2000, like, you see the picture you get compared to the hourly. So you see on the hourly, yeah, you're heading down, but you see how it's kind of, it's just not as, I mean, look at the picture you're getting here. That's a nice strong trend run right there. Beautiful, right? So now you can see, since this is a 10,000 contract chart, we're going to close here momentarily, that bar, and that hits 10,000. And then we'd be basically starting a new bar heading into the open here. And then, you know, what would I want? Yeah, I would want a big pop like this at the open that I could try and sell into for a move back down and a continuation of that trend. That would be good risk to take on the open, which is what I would be looking for. Especially given, you know, given the daily chart of the Russell, you guys, I mean, it's the weakest. I think what we're seeing on the Russell, if you want to look at the daily here, here's the daily. You see how the Russell's a lot weaker than the NASDAQ and the S&P and the Dow? And now you see if we're going to blow through those lows, which we definitely could with the way rates are looking right now, then you could get one of these situations where you're, you know, like this here, big move down. I think we could see, I mean, depending, we break some key levels here on the Russ, we could see a pretty big move to the downside today. So I think that's definitely a good pick for the open. That's what we're going to keep an eye on. And yeah, monitor everything else. I'll probably do the copy trader. And, you know, I'm not being super aggressive today. Basically, I don't know how many contracts I'll do on the Russell. I'd be looking for, the Russell is $5 a tick, so it's $50 a point. Trying to get short up in here around 65, and target would be back down here, 45, 20 points. You know, one contract. I mean, I guess I'd probably go a couple of contracts and maybe try and make, you know, $500, $600, $700 or something like that. Seems prudent. That's what I'm going to be looking for. And you want to look for confluence as well. You've got a lot of resistance up in here, 1964 as well on the hourly, 1966. That's also coming in here. So that's going to be a good level for us to watch, you guys. And that'll be in about 15 minutes when the market opens. So let's go ahead and just take a 5-minute break here. I'm going to refill my coffee, get ready for the open. Yeah, I'm excited for a good day. Let me know if you guys have any questions. I'll be back in 5 minutes. All right, guys, we're getting ready for the open here. Had to get some chocolate, get some energy. Okay, so we are going to look to short Russell 2000 here at the open. The thing is, will it come back to our entry level? Don't know. We can take a quick look. I mean, so here's the Russell, you guys. I would love to short it somewhere up above. You know, the Russell can move, you know, the Russell can really move, which is why it's a good one at the open sometimes. I mean, I would love anything up into 1964, 1965. This is the 10,000 contract bar chart here for the Russell. If you look at the hourly here, you know, 1965 would be up here, sort of above these highs, which could be some stops hiding up there, you know. Market makers could potentially want to drive us up there, take some stops, fill us short, you know, settle back down like this or something like that. Try and get short a couple contracts, you know, make $500-600, something like that. That's what I'm looking for. We can take a look at, I think the NASDAQ just, you know, we want to focus on the Russell because I think it's the safer bet because it's the most rate sensitive, right? We've got rates really rising now, strong dollar. So the Russell's going to be the most sensitive to that environment. So I think that's why it's a bit of a safer guys, remember? Safer, nothing safe. It's a bit of a better play at the open. That's why we're going to see if we can't catch something on the Russell. And I will copy trade across the 10 accounts. And I guess I'll probably do, if we were to get up there, if we were to get up here to 1964-ish, I'd probably short a couple of Russell contracts up there. You know, risk a few $100, something like that. But let's see, we've got 5 minutes until the open. So, you know, the Russell, if we go back here and look at the open, you know, it can be a pretty wild son of a gun. Here was the open on, let's see, is that Friday? I think so, yeah. Here's the open on Friday. Well, that was NFP, so the open was a little more quiet. Let's go back. This is an hourly chart now, guys. So here you can see, you know, the open right here. You know, you got an opening range hourly bar there of 1968 to 1944. You know, that's 25 points. So it's not inconceivable that the Russell, you know, could come back up to this level here. You say, well, why don't we just short it right down here? Well, because, you know, the Russell can get pretty wild, and if you short it here, you're basically just betting on it just breaking lower at the open. That's fine if that's what you want to do, but I like to bet on, you know, lots of kind of crazy volatility. So I'm looking to pick a spot, you know, at a resistance level that I think gives me the best opportunity for success if it gets filled. So it may not get filled, but if it does, I feel I have a very high probability of a good trade from up at that, you know, 1962, 63, 64 level. That's how I like to play it. ES doesn't look bad. Let's look at ES as well, just because. Go ahead and look at ES. So here we have ES hourly chart. Look at the ES volume-based chart here, 80,000 contracts. You see ES already pushing higher. I like the Russell better, you guys. Let's see what happens. We'll find out in a few minutes, but I like the Russell. Just the environment that we're in right now with the rising rates, strong dollar. Still got the dollar at 07.62, firmly below 08. And then, you know, we'll get back to, want to keep an eye as well on some metals. Make sure we're not missing anything, since I do think those are going to be the best plays for the day. So let's just we're going to probably short the Russell if it pops, but let's just, while we're waiting for the open, we want to make sure we're not missing anything. So bonds, we're waiting for a decent pop at some point. We'll get one. You know, bonds will give us something. Gold and silver, similar. We're just waiting for a little bit of a pop. So here's silver. Yeah, silver could be at the start of a pop here. That'd be nice. You know, look, platinum's back up to 908. So that was a, you know, a good call to just kind of be patient. Yeah, so I don't think we're missing anything right now. So I think the Russell is a good point of focus for the open, which is, I know I've got a clock on the quant tower somewhere. Where's that quant tower? It's over here. So it's 9:28 and 40 seconds. So we can do a latency check, Steve. I will tell you it is 9:29 in 3, 2, 1, 9:29. So now you guys know how much latency you have. I'll tell you when it's 9:29 in 10 seconds. Right now. Tell you when it's 9:29 in 20 seconds. Now. We'll do one final check, 9:29 in 30 seconds. I will tell you. Now you guys know what your latency is. Usually it's anywhere from 2 to 7 or 8 seconds. All right. So I don't have an order resting. Remember, I've got my area. I'm going to see if price gets there, how things are looking, and then you will see if I decide to go short or not. Keep that in mind. But I'm looking at this general area up here on the Russell 1965. We may not get there, but so far just being aggressively sold into. Looks like we're not going to get our bounce. Ooh, Russell heavy. You never know. I mean, the Russell can get crazy. Stay patient. Oh, no worries, Steve. Drive safely. All right, so we're waiting. We're going to try and get short the Russell just up higher up into 1964, somewhere up in there. May not get there, but let's keep an eye on it here together. Russell should be the weakest today with rising rates, strong dollar. I think all the indices are probably going to catch some people off guard and head south today. We'll have some good opportunities shorting the whole day, just waiting for the right levels. For the Russell right now, you can see we're trending down nicely on the intraday volume-based chart. I just want to get short closer up into resistance. And if we don't get it here in the Russell, we'll get it on one of the metals or the bonds later. You just don't want to chase. You know, if you chase down here and you're short at 1944, yeah, you might be right and it might drop and you make money, but it might pull back to 1960 and then, you know, where do you cut it? So stay patient here. We got the ES at 49.66. NASDAQ still firmly above 17.7. So this is the tick base, sorry, the volume based chart. Now here's the hourly. You can see the Russ is just collapsing. So no pullback yet, but look, I mean, let's see what the ES is doing. We've got a good game plan for today, guys. We're in a good position. Did our prep. Now we're just waiting for some decent trades. So here's ES. So, you know, if ES was to punch back to 49.82, could be interested in it up there, maybe. Have to wait and see. Keeping an eye on the Russell on my other screen, guys. Look at the NASDAQ. You got a lot of resistance up here on the NASDAQ. 17. Oh yeah, 17,780 exactly. But the Russell definitely looks weaker, so rather just wait for that to pop as opposed to the NASDAQ. Let's look at ultra bonds here quickly. Yep, continuing to press lower, so we're just waiting for a little bit of a pop on the bonds. Look at the 10-year. As long as that yield continues to push nice and high with a strong dollar, the Russell is going to have a rough day, and we just have to pick good entries to short. Here's the 10-year. Let's look at gold and silver as well. Platinum, copper. Just got to wait for some good opportunities to short. Here's gold. Remember, when we cycle through, guys, we're using the hourly chart. Look at silver. When we get up into an area of interest is when I'll flop over to the volume-based chart that gives us a little bit of a better, tighter read on entries and stops. So here is copper just falling out of bed. Let's look at platinum. We like this general area up here somewhere, but I think it's just going to go a little higher. Crude, I think, is going to be a volatile mess today. Be careful on crude. So I think the Russell, here you got ES pushing back now, 49.70. So keep an eye on the ES as well, because I don't think, you know, the question for the Russell, is it going to come back? I mean, I think ES, you've got taking a look here. Yeah, I think we, oh, remember guys, we've got the PMI. S&P Global Composite PMI at 945, so getting a 1-2 punch here with the open would be nice. And we definitely have some movement. And then we got ISM services at 10, so got some stuff going on. The Russell here is continuing to break down. Keeping an eye on all the volume-based charts here. So there goes the Russell trying to bounce a little bit. So ultra bonds here, you know, you've got a pretty strong potential support pattern here. Not that I'm not going to buy this at all. I'm just, bonds are super weak. I'm just hoping that this could give us a decent little pop. Look at gold. Silver as well, if we can just get a, you know, a decent little pop. You know, back up in here, 2260 maybe. Real nice on silver. Going to be a rough day for the indices, guys. Look at the NASDAQ. We do have our trend, our yearly trend line at 17,776, guys. Let's not forget about that again. I've been just nailing that. I think the NASDAQ here, 1776 right up here. You know, you could have a, let's just flop over to the NASDAQ, see where we're at on the hourly chart. I'll bring up the NASDAQ depth of market here just so we can all get a little bit of anxiety watching the NASDAQ fly up and down the DOM. We might trade the NASDAQ, we'll see. So you've got a lot of resistance. Oh yeah, 17,776, baby, on the NASDAQ. Thing is, the NASDAQ daily just still looks, it's a little more, I mean, the Russell's definitely the weaker one, but NASDAQ, I think it's got to respond to the strong dollar and higher rates. Again, the safer trades for today, guys, if you're just joining us, is just waiting for bonds to give a little bit of a pop, wait for metals to get a little bit of a pop. Those have the best tailwinds to the downside with a strong dollar and rising rates, right? So that's why we're watching the equities here at the open. Oh, you know, we do have the S&P Global PMI at 945. So we'll probably watch for an opportunity to get short bonds, I think, on that PMI, because that could cause the spike up that we need as the catalyst to get short. And I think it's just a better bet than the indices. So let's go ahead, take a look at the 10-year Treasury for the PMI. I'm keeping an eye still on the Russell and everything else. Go ahead and bring 10-year up over here. So here's the 10-year. Okay, no more anxiety with the NASDAQ DOM. We'll bring up, guys, look, we're going to go from the NASDAQ DOM, which is just, you know, full of anxiety, look, to the 10-year DOM. We can all sing Kumbaya. It's very quiet, calm, nice situation, relax. Okay, let's see if we can get a good spot to go short on the 10-year. This I will set an order. So here's the 10-year Treasury. Got a lot of resistance. I want to see if there's some sort of a pop. Here's the hourly. So let's look at the ultra bonds. You can get a good read on as well. So here's the ultra. We're coming out of a little bit of a strong resistance pattern. Back to the 10-year. I'm going to look to get short the 10-year heading into this. I'm going to put an order for the global PMI. Question is, where would we want to short? You know, I think, you know, look, on Friday, the 10-year, guys, on the back of that NFP number, which was just insane. You know, you had like a, I don't know what Sigma move, but that was a, you know, that was a wicked move there on the 10-year in terms of the size there, just boom, right on the back. Of course, I lost 1,800 on that, but then I ended up finishing plus 1,000. So I made the 1,800 back, plus then I made another 1,000. So no big deal. Just had a little fun with that one challenge account there. But we're looking for something like that, except where we don't get, you know, like a crazy outlier number. That was just super rare. So now we'd be looking for, because OMA says everything should continue to the downside. And so you'd want to ask yourself, where do you have a lot of OMA resistance? You know, certainly up into the daily envelope bottom up here, you see? So what we'd be looking for is, see the 10 years heading down like this, we would want some crazy punch up like that, you know, that fills us short and then just settles back down here somewhere. Believe it or not, that can happen. And that's why I like to go fishing for those on these types of announcements. So right now, I mean, for example, I'm looking at where would it be a gift to get filled on the 10-year here. Well, yeah, basically OMA here, the daily envelope bottom. See, this is the daily, right? Because these are the daily levels here on the hourly overlaid. So on the daily here, you know, you've got that true average, the envelope bottom all coming in. If we were to rifle back up there, that would be a great spot to get short. Now, is it guaranteed to work? Of course not, but it's where we have a good probability. So then you can see, here's the daily envelope bottom overlay on the hourly chart here. There's the daily true average. So, you know, I would be willing to set a couple contracts short up here just to see if it gets filled. Because it's kind of one of those things where if it punches up there and fills you and then immediately drops, I mean, you've got it, right? Whereas if it punches up, fills you, and then stays stubborn, you're like, uh-oh, this is not right. You just get out, right? So that's the key. On Friday when I did that with 5 contracts because I was just having fun on one of the accounts. Today, since I'm copy trading, I'll just do 2 contracts across all 10 accounts. Because we're on our way to 6 million in funding. All right, let's see. Just for fun, guys. That's why. Let's see. You know, we're asking for a massive pop, but sometimes on these PMI numbers, you sometimes will just get a big pop. So that would be, you know, where's the high of the day? See, the high of the day, because sometimes they'll just want to run it back up, even just to the high of the day. 21, yes, I could set an order there at like 20, I think. So I'll try that. I'll set an order for 2 at 20. Take this. No centering. Question is, do I want to copy it? I think so. I think on a day like today. All right. So, got an order. You can see, guys, all the working orders. I got 11 working orders. So that's across accounts and, you know, basically 2 contracts. See what happens. Probably we're not even going to get filled. But if we did, I'm just looking at the overall daily, weekly structure, saying to myself, okay, you know, if I could turn back time, you know, that's a song. I'll sing it in a moment. But if I could turn back time and get short at the start of today up near the daily highs, would I want that right now? Yeah, I would. So, okay, fine. I'll set an order there. And if it gets up there, great. You know, that'd be fantastic. Now, sometimes you can get just blown out of the water on these. So we're going to have to, you know, keep a close eye on it. But let's see. It's 9:45. So that's PMI should be coming out now. This is kind of what happened on Friday with NFP. There was like a pause and then something happened. So we'll see. Nothing's happened yet. Check the dollar, 07.56. How are stocks responding? Yeah. ES 49.68. NASDAQ's coming down a little bit. So far, not much out of this news announcement, but we'll wait. Remember, we got ISM services coming out in 14 minutes now as well. So we'll also try something on ISM, see if we can get a good fill on one of these markets we want to get short on. All right, so I'm just going to go ahead and flatten. So I'm removing that order because it's just not going up there right now, and I don't want to forget about the order. So let's prepare for ISM. So global S&P PMI was a bit of a dud. So the actual, it came right in line with expectations. The forecast was 52.9. It came in at 52.5. So no big outlier there. But ISM services, you know, that's an inflation-related number. So if we have some sort of an outlier, we could get a pretty volatile move. Really, the charts are saying we're heading down, right? Bonds are dropping, yields are rising, the dollar is strong against the euro. So metals should continue to head down all day. Bonds should continue to head down all day. I think stocks are going to have a heavy headwind, you know, going to be capping rallies probably on stocks. So we're just waiting to get short on these markets. Not much has happened, you know, since we started at 7:38 a.m. Just waiting for the right setup. We've had some continued follow through. For example, if we look at let's look at silver here. Oh, this is good. Silver's rallying, guys. This is what we want to see. We want to get short silver at some point on a nice little bounce here. So we kind of started here. Right here is where we started. You see, markets are kind of where we're at when we started. Bonds are a little bit lower, but we're waiting for a good spot to get in. All right, so we're going to make our decision on what market will be the best one to trade at 10 a.m. based on the hourlies. So let's go ahead and cycle through those right now. Let's look at the E-mini S&P 500. Remember, stocks are going to be volatile today. Be very careful being long up here. I think they're going to respond to the downside based on what we're seeing with yields, the dollar, the VIX. So I'd love to see stocks. I'd love to see ES here. This is the hourly ES. Sometimes they want to ramp it up. So you see all this OMA resistance right up in here. If they were to ramp it up here for ISM, that could be a good spot to potentially get short for a move back down. Okay, so keep an eye on ES. I really like that 49.81, 49.82 level. Still got 12 minutes until ISM. Remember, it's the services. So here's the NASDAQ. I like the ES better. Look at the Dow. The Dow we will trade sometimes, but it's a bit of a thinner, more wild beast. So if you don't have to trade it, I like to trade ES. Even though NQ is wild as well, it's just thicker than the Dow. Look at the Russell. I think it's going to give great shorts all day. So if we just patiently wait for a nice pop on the Russell. Let's look at the Ultra bonds here. Ultra bonds very weak right now, along with the 10-year. So any kind of a pop. You see, as long as bonds keep heading down, rates are pushing higher, the dollar's getting stronger. We just wait for the odd, outlier. So right now that's silver trying to, buck the trend and push higher. So we may want to get short silver. Just see where we're at heading into ISM. Here's gold. Gold is not my favorite market to trade. So if I have a choice between the two, I'll trade silver. You can get some nice moves in gold too. Let's look at silver. So silver, you see just trending down here on the hourly. Look at the silver intraday volume-based chart. So here's the 4,000 contract intraday chart for silver. You can see it's a nice resistance level there at 22.52, especially with the strength we're seeing in the dollar right now and yield spiking. Silver does not like this. The metals do not like this. So definitely interested in silver up in here, 22.52. Keep an eye on that. Right up in there. Copper is already leading lower, which is why I think, look, this is not looking good for stocks with copper heading lower. So we're still waiting for, we'll short copper as well. Any of these guys, they're all going to be correlated. I think platinum is going to push a little higher than the rest. I already talked about why at the beginning of the day. Crude is heading lower with copper. This is very recessionary. The fact that crude can't rally with the Middle East on fire. So here's crude. Yeah, I think indices are in trouble here, you guys. I think my top pick heading into ISM, if we get a spike on bonds, I'd love to short. I think they're the safest one. Silver could be a good short, but silver's a bit of a wild one as well. But we will trade silver. If there's, if I have to choose, if I have a good setup between bonds and silver, I'll take bonds. But if bonds aren't giving me the good setup and I only have silver, then we'll take silver. Let's look at where the 10-year is headed. See, so far the 10-year is just unable to rally at all, which means silver. If the 10-year is unable to rally, then with yields pushing higher and the dollar getting stronger, I mean, silver should be met with heavy selling on any pop. So it's kind of my favorite. The only one really bouncing right now. Look at that. Again, here's the silver. Just kind of looking for something like this on the silver intraday chart. You see how the volume-based This is 4,000 contracts. See, we're just trending down here ever since the open, trending, trending, trending. Now here's our first pullback. On OMA, you got some resistance in here. So we're just kind of looking to jump on board the pullback for the resumption back down to those lows. And that's because the dollar's strong. That's because yields are pushing higher. 10 years firmly above 4% right now. So that's a recipe for weak metals. And if we look at the daily chart on silver here, I got a lot of resistance up in here. So that is what we're looking for. And here on OMA, you know, depending where this closes, right? Because this is going to close in about 2,700 contracts. You've got a really nice combination, confluence of resistance there, where it gives me a good line in the sand. You know, I could short there. If I'm right, it does that. If I'm wrong and it, you know, hits the stop, you know, the risk is quite measurable because I've got a good spot there. I think that's what we're going to be looking for on the back of ISM. Question is, do I want to copy trade it or just go big on a couple of accounts? I think with the strong dollar here, I mean, silver is going to be under pressure the rest of the day. So the question is, you know, is it going to roll over from here or go higher before it rolls over? I think based on what we're seeing now with the strong dollar and strong, you know, bonds can't seem to bounce at all, meaning upward pressure on rates. I think this should be a good spot to try and short silver. There's the hourly. Yeah, I think I might have to try and short silver. Depending where it closes, guys. If it closes above 22.54, then it's breaking my resistance levels. Then I'm not going to short. You know, I'm looking at what OMA is telling me, obviously. So we got ISM in 5 minutes. Let me just use the restroom here for 2 minutes. I'll be right back, and then we'll see if we're going to potentially trade silver to the short side. Back in just 2 minutes, guys. All right, guys, I'm back. Be sure we're coming across. Okay, so I think because it's ISM and it could get crazy, I'm just going to go ahead and just do 2 contracts short silver, depending where we close, on one of the Apex challenge accounts. Just, you know, there's no need to, if something crazy happens, I don't need to risk all 10 on one trade. So see what happens. I'm looking for, I'm kind of looking for this to just, I wait for the close of this. So, you know, we still have a couple thousand contracts left on silver. So I'm not going to set an order because I need to see where this closes. Because if, you know, and if ISM happens too fast and we miss it, we miss it. But I need to wait and see where this closes in relation to that resistance level. So, but my idea heading into it is to potentially short silver here, and I'll let you guys know. I think the latency is, I don't know, 2 or 3 seconds, something like that. I'll tell you the time right now. So it's 9:59. That was exactly 9:59. So we got about a minute to go. All right. And, you know, these contracts are going to move very, very fast on the silver, but we'll see on my DOM what I do. It's just one of the challenge accounts, so we'll see. Still a little bit in fuck it COVID mode. We got 5 seconds. There you see, silver responded the way I was thinking. I see it just happened way too fast. I'm waiting for this to close. Probably not going to head back up there. I'm not doing anything yet. We still got 1,400 contracts left till this closes. I'm kind of hoping they could just ramp it back up to 50. We'll see. Just waiting. Dollar getting stronger. Keeping an eye on bonds. The Russell. Oh yeah, bonds are headed lower. Metals are not going to like this, so I hope silver can try and give us a little bit of a pop here. Oh yeah. Anywhere up into 48 maybe. Trying to short 48. Would have to fill me and then close back down, you know, if it's valid is what I'm looking for. So we'll see. Starts to go against me, I would just cut it. Go up to 54 maybe. Raising the order up to about 54. It's at 53 now. I'm looking short 53. I don't know if it'll get there, but I'm just seeing a little bit of a recovery on bonds in the dollar, which could cause silver to try and push a little higher. So we'll go cycle back through the hourly charts here in just a sec. ES is doing nothing, just sitting at 49.63. Russell continues to drop. So in order to make this OMA pattern valid, I kind of want it to come back up in here. Give it a little bit of a chance. Doesn't, then I'll go ahead and pull it. Bonds are heading lower now. Moving back to 48. We'll see if it jumps. I would want it to jump up, fill 48, and then close back down. Let's see. These bonds are breaking some key support levels now. Dollar's nice and strong. See if we can just get a jump up, fill us 48, and then immediate reaction to the downside. We've got about 800 contracts left until this closes. Ultra bonds pushing lower. Dollar hanging on to gains against the euro. So good spot to get filled short if we can. You can see on the hourly chart here, got some resistance up there. Here we go. Trying. See if it can fill us and then get knocked back down. About 650 contracts left till this one closes. About 550 contracts left till that closes. If we get filled, I'm looking for selling right away because, we don't want to get caught in a counter trend bounce here. But based on what bonds are doing now in the dollar, got to give it a shot. It's going to depend on where this closes. I almost got filled. That was one tick there, you guys. Kind of what I was looking for. And here is trying to recover a little bit. Let me go ahead and pull that for a second. Keep an eye on this heading into the close. So no order, just oftentimes I'll do that. It went up and just missed our order. Right now we'd already be in the trade and my stop would be at break even. So let's see. Bonds looking very weak. Got about 400 contracts left till this closes. Stocks are dropping now a little. ES is 49.60. Dollar still 107.45 against the euro, so that's good. Strong dollar. High rates. This This one's about to close here in a couple hundred contracts. Just love to, sometimes silver, just love to see it just spike up. Give an opportunity to get short. There's still a lot of support in here temporarily at 22.42, so sure, it could just pick up the true average and fire down, but it could pick up the support and push higher and set up a better short later. So that's why I'm being a little bit patient right now. A lot depends on where this bar closes, which is in about 250 contracts. If it closes here in the middle, go and cycle through the other markets. But stuff is moving now, so we should get some opportunities. What did that? The ISM came out 53.4, so a little hot. Should probably weigh on the stock market, I'm guessing, together with the charts that we're seeing. Here for now. Cycle through the hourlies. All right, so let's look at ES here. I think silver is going to drop, but just missed our entry by a tick. Okay, so now you can see we're kind of getting the party started potentially here to the downside for stocks, which is nice. So I'm just going to look at. Let's just do a quick cycle through here, you guys. The NASDAQ. Nice, trying to exit to the downside. Russell under a lot of pressure, like we've been talking about, the most rate sensitive. So now Russell is very weak. Look at the ultra bonds. See, it's just been, yeah, it's going down, but it's still, I'm waiting for an entry spot. You want to get some sort of a little bit of a pullback. I mean, the way I like to trade, because the reason I wait for them, guys, is because the odds are, on a day like today, for example, the bonds are just going straight down. That'll, even on a trend day when you're going to head down most of the day, 9 times out of 10 you will get a decent pullback to join the trend. So sometimes it'll just go straight down, but that's the exception, not the rule. And if today's one of those days, that's one of those days. But you've always got to assess on where you want to get in based on how much risk are you willing to take. Still have a feeling by the end of the day there's going to be something will set up nicely. So gold's still kind of stuck here. Silver again on the hourly chart. There's silver. You see we're just temporarily at this daily support. It's trying to hang on. I don't think it's going to. So we get copper. Yeah, copper just waiting for a pullback too. So definitely, with OMA, we're nailing, obviously, the analysis is spot on as usual, and using the market correlations to, get a very good sense of what we want to trade, what direction, which markets. Now we're just waiting for them to set up, right? So you gotta let the markets come to you. So platinum's finally starting to react to the downside a little bit. Crude. Yeah. Okay. So now keeping an eye on everything. I'm going to go back to silver. So that was almost a pretty sweet entry there on silver. You can see we almost nailed it. That's kind of what I was looking for. Fill the 48, close down on the lows, and now you just, you got a great trade. But it wasn't meant to be. Yeah, it could go market as well. But just remember, my reflexes are pretty slow right now with COVID. So I'm doing the best I can under the circumstances to follow all these markets. And the execution is a little slower than usual. Let's look at, we got ES heading down nicely now. Got NQ. Here's NASDAQ. You know, the good news about the indices is if you can't jump on board the bonds or the metals, if they don't pull back nicely enough, you know, NASDAQ or S&P will at some point. So I'm pretty sure I'd be surprised to see the indices recover today, guys. So I wouldn't be looking for BTFD today in the indices at all. Just wait for the shorts to set up. So here's the NASDAQ. So what we'll do is I will go ahead and set this up. So we will follow, because we've got a clear picture of what's going on. So let's follow. Go ahead and minimize our hourly for now. And let's go ahead and put up our main volume-based charts on screen here so we can follow the NASDAQ here. I'm going to follow the main ones we're kind of looking to take some action on. So here's the NASDAQ. Look at the ES. So we're just going to be waiting. Let's look at the Ultra Bond. I'm just going to bring my favorites up here, guys, because we're going to look to get short one of these or many of these at some point. No, wait. The trading day is long, you guys. You just, once you get your thesis right and you know you're right on the day with your thesis, which I kind of knew heading into the day anyways. That's why we've been waiting to get short. But now we have confirmation. With stocks breaking what I thought was going to happen. Now we just wait. Our stock's going to pop and give us a short. Our bond's going to pop and give us a short. Our metals, one of them's going to pop and give us a short, or many of them. And those are the ones, you know, those are the right pickings that we just wait for. The Russell, I'm keeping an eye on my other screen. We don't need to bring that on the main screen. We can bring the Dow. Bring silver, the Russell over here, you guys, keeping an eye on that. Kind of making my favorites here. Silver, definitely a favorite. We'll keep an eye on that. And platinum, I can kind of see there. Copper, so we're kind of waiting. So now we're just waiting. So on our main screen, we'll just have these are kind of my favorite markets, ES, NQ, and Ultra Bonds. Let's have these up here for now. And you can see what we're doing is just waiting. The Ultra Bonds, and I'll figure out how to be faster with this. You got a pretty good pattern there heading into ISM, but we were watching silver. We almost got silver. You got to focus on one of them. So but that's kind of what we're looking for. So now you can see silver is upping nicely. Just setting all these up. Because it's so much easier to jump on board with the volume-based charts when they're trending than it is the hourly. All right. Just kind of getting organized here with the volume charts on my other screens. The Dow, I gotta keep an eye on the Dow. You never know. Because at this point, whichever one gives us the bounce is the one we will short. Okay, so we got platinum kind of just heading down, copper heading down, gold, silver, they're heading down, but they're still stuck in those temporary ranges. So the Russell now, you know, it's trending down really nicely. We just want to wait for a pullback there. The 10-year and the Ultra Bonds here, you guys can see on the main screen, the Ultra Bonds, I mean, rates are heading up. Dollar is just looking nice and strong. You know, Market's not liking this today. Now we just gotta patiently wait. Trading can be very boring when you do it the right way, huh? I don't think it's boring. I think it's fun. Other people who always need to be in the market and scalping and entertaining themselves. I mean, there's a lot cheaper hobbies to get. If you need trading for entertainment, you should just go do something else. If you want to make money of trading as a career, then it's great, and then you don't get wrapped up into the entertainment aspect. It's entertaining in a different way. It's entertaining to play the chess match. All right. So I think at this point the news is out of the way. So definitely put the copy trader back on. For all 10. All right. If anything sets up, I'm going to take them across all accounts. So now we just wait. And I'm going to hang in here as long as I can for you guys today. Right now I'm hanging in there. Be a lot easier when I'm feeling better. So now we're just, you can see the indices, ES in the middle and Q to the right, just breaking out and do a little bit of a trend run to the downside. So, you know, these will be volatile. They'll very rarely do these just head in one direction. Russell's trying to give us a little bit of a pullback. Not much of one, but it could be starting. I mean, I think the Russell's going to be headed for 1910 today. So with what rates are doing, what the dollar's doing, the Russell daily, guys, look here at the Russell, the daily chart. I mean, just falling out of bed. So I think we're gunning for down here on the daily Russell. So if that's the case, and we look at the volume-based intraday Russell chart here, you know, see we're trending down. We're just not getting. At some point, there will be a little bit of a relief, and that's where we want to get short and ride. That's the way I play it. You guys can play it how you want to play it. That's the Russell. Same for the Dow. Silver would be great if we could get a pop anywhere back up above 2250. Would be awesome. So I'm waiting for that. So what's good now is we're not bound by time. So we're not working with the hourly chart. We're working with these volume-based charts, and they'll give us closes constantly. So I'll have to set alarms for these when session's over today, so it'll alert us. But you can see the NASDAQ just closed here. It's not dependent on time. It's dependent on volume. So we just had 40,000 shares close, sorry, contracts. And, you know, then it's constantly resetting my indicators to the next bar, which is good. That's why you get a much more fluid read with, I mean, the daily chart, the weekly chart, the monthly chart, the accuracy is insane. And then sure, the hourly, the 4 hourly, the accuracy is really good. But if you want like similar accuracy on a daily chart, but down on an intraday level, I highly recommend the volume-based charts. Oh, nice. Steven he shorted platinum at 907 to 901. Way to go, man. Steve is killing it, you guys. He knows how to use my analysis on these days when I'm sick because he's taking the course, so he can tell what I'm talking about. He's like, oh, Andy's not shorting platinum, but I can see and hear it's a good spot to get short. Good job. So you got short at 907, covered 901. Nice. Did that get you over the line on another one of your challenges, or did you take that on your funded account? Yeah, I think whatever retraces today, I'm just going to be waiting to short pops. I can see silver and gold right now might want to mount a little bit of a retracement rally. You can see here, guys, on silver, it's got a lot of support down here at 2240. So we could punch back up in here, which would be great. So we're just waiting. You see, you just wait for these markets to come. We're going to get something nice. And I'll just have to make the decision, you know, do I want to, how heavy do I want to go on these challenge accounts? But for the first week with COVID, they're up fine. So where we're at. Steve, did you short that in the car? Gosh, you know, guys, I have I have 4 screens. I never thought I would need. I guess I need to go and get a couple more because we're going to have to follow the volume-based charts across these every day instead of the hourly. We just get such better reads, but I need more real estate. It's all filling up now. Oh, man. I have to start hanging screens from the ceiling. It's really just for display purposes for you guys, because normally for me, I'm just, you know, punching back and forth, back and forth, back and forth. Here, I like to keep it all open displayed so I can drag it over and show you guys what we're talking about. All right, so kind of waiting for anything to pop, you guys. Anybody has any questions, let me know. Oh, that's great, Steve. Yeah, Steve, you're trading well. I mean, I'm analyzing fine, I'm trading fine, but when I feel better, it's going to be a lot easier to get back to my old self of executing. You know, because it's weird when you're sick and you're like, I don't know how you guys feel, but when I'm sick and tired like this, I just, you know, when I trade and I'm waiting for my setups, I've got like a killer instinct. You know, I'm like a shark waiting. Whereas when I'm sick, I just, I'm not really a shark. So I'm not like, I don't have the same aggression that I need. Which is okay. It's bound to happen once every, I can't remember the last time I was this sick, maybe 4 years ago, 3 years ago. I guess it happens from time to time. So we got a little bit of a rally on the 10-year, which is why the metals are trying to rally. It's probably why stocks are trying to rally here. Yeah, exactly. I hear you with silver it's a big contract. So if you have the choice between silver and platinum, especially if you're on like one of those little, you know, funded accounts where you don't have so much draw and you want to keep that account, which you should want to keep that account. Don't be stupid with that account at all. Yeah, then you want to take, if you have a choice between 2 contracts, take the smaller one because you don't want to take too much risk. And guys, just to put it in perspective, you know, when you're doing these challenges, you got to get real. I mean, I see so many people out there, they don't, like, in order to pass a challenge, at least a 50K one, with that, not only do you have to generate more than 100% on your money. I'm not saying it's not a good idea. I already did the math. For me, it's a good idea. This is why I'm messing around with it. So for me, it's fine. But for the average trader, you got to make over 100% on your money without hitting the trailing draw. I mean, come on. And that just gets you to the funded account. Once you get the funded account, you got to hit 100% again to get your first payout. So you got to hit, you know, you got to basically make 250% on your money. And with the trailing draw, guys, like that's, you know, that's a big ask. So just keep that in mind. If you are struggling with challenges, you know, Steve's not, because he's been following my analysis and doing really well. But if you are struggling with challenges, don't beat yourself up too much. I mean, the bar to pass those is very high. So like if you had, you know, 100 grand of your own money and you do 10% a month, that's fantastic. And that's 10K a month. And you'd be in the top percentage of traders doing that. So, you know, YouTube and funding challenges can skew reality a little bit. So just keep that in mind if you find yourself, you know, beating yourself up. Let's see what Steve said. Yeah, so you said with my analysis, you're able to see the charts through the OMA lens. Yeah. too short 907, stop 910. Yeah, that was great. That was a fantastic read, Steve. And this is why I hope, you know, and my goal over the next, you know, couple of years, I want like, you know, 50 to 100 super dedicated OMA people like Steve, where in our elite community is, yeah, sure, I'm feeding you guys after hours trades and stuff and keeping you up to speed because I have to do it for my own trading anyways. But the goal is to make all you guys like awesome as well, so that it's a community where everybody is sharing with each other and we're all benefiting because the edge is awesome. So that's why in my mind it's going to be different than anything else out there, because and that's another reason why like I'm not, it's not a quantity game for me, it's quality. So I want people that come in and take it seriously and yeah, I want to contribute and treat trading as a profession. I mean, think about how long you have to study to be a doctor or something like that, and why should trading be any different? All right, gotta make sure I don't miss anything here. So 10 years, trying to rally a little bit. Ultra bonds are trying to rally a little bit here. I mean, ultras could be. Russell's trying to rally. It would be nice if the Russell could rally. Keeping an eye on. So this is the one thing I gotta figure out when I'm streaming is, you know, all the volume-based charts, they close at different times, which is good because we get more opportunities, but it's also for me, I have to process things much faster because the hourly, what's nice about it is that it just, you check everything, it's all kind of on the same schedule. But there are enough advantages with the volume-based charts that if I can keep up with them, they're definitely worth it. But right now we're about to get a close on the 10-year. The Russell, but I think I want the Russell to pull back more than that. Keeping an eye out here, you guys. Yeah, since we're monitoring so many, we don't need to take something and wait for something that really pulls back nicely. Something will. Here's the Russell. Trying. I'd want it to pull back further up there. Got 400 contracts left. I don't think we put the low in for the day on the Russell. We'll see. You never know, but Russell, I'm kind of just waiting for a little bit of a pop. Copper is putting in a little bit of a counter trend rally here. This is silver is too, guys. See, this is good. This is all you gotta do is wait. Look at silver now. So silver can just punch back up here. Got a very nice OMA situation up in here. So just patiently wait. Here's copper. We've come a long way already, so you just got to be careful you're not shorting near the bottom, you know. See where we're at on copper. Oh yeah, I think copper's going lower. Copper's already getting sold into on that rally. Platinum could try and give us a little bit of a bounce, like Steve said. We got to bounce back up to like 906. Certainly silver just would be amazing. Anything up into 2250. And it could happen because the 10-year here, this is what's going to determine it. See how the 10-year is consolidating for now right here. So if we were to get a pop, that would be a little bit of a break from yields rising, which is fueling the counter trend bounce right now in the metals. Now we got Russell bouncing a little bit. See, the ultra bond here is trying to bounce, but not really. Kind of liking the Russ, decent. A lot of resistance. A lot of resistance up in here on the Russell at 1936, so we'll keep an eye on that. I brought the Russell up on the DOM over here. And an eye on silver as well. Russell's definitely a good depth of market to drive you nuts like the NASDAQ. It's just always all over the place. You guys having fun today? I'm having fun. I've been missing, even though I've been streaming trading, just still not the same amount of time every day because of the COVID. So on the weekends, this weekend I was really missing the markets. So copper rallying nicely. You can see the Russell got sold into pretty good right there at 1932, but I wanted a little higher. Bonds, ultra bonds are about to get a close. Yeah, they're all. That would have been a nice one to see for the ultra bonds heading into the ISM. Like I said, we almost got silver, and that's where it's tough to monitor so many markets at once. So ultra bonds are about to close here. In some movement anyway. See here. No more news. Keep an eye on some of the other ones here. Silver's trying to push a little higher. 10 years trying to push a little higher. Kind of keeping an eye on these. With the ultra bond on the DOM so we don't drive ourselves nuts. I'm still keeping an eye on the Russell, waiting for that. Copper could potentially be setting up a good short into 3.78. See. Copper looks like it wants to head lower. Firing trend. Yeah, the Russell's just getting, that was just getting shot straight down. You know, we got a lot of resistance now on ES. up into loading the daily chart here. Oh yeah, I think we're just wait for this ES to pop. I mean, be a great opportunity to get short any one of these. Looking at everything on my other chart. Yeah, so silver was trying to pop, couldn't. ES might. Go ahead and bring ES up. That's what's kind of nice about the indices. You know, you can, they're sometimes the ones that'll come back and give you the opportunity to get in. Look at about 19,000 contracts left here on ES till that closes. I have to eat some food soon. Trying to hang in there with you guys so we can get our trade, but you know, oftentimes the trade will come when the streaming's over. There's just, I can't control when the setup comes. Always try and leave you guys in good shape so you know what to look for the rest of the day. Let's see, just keeping an eye here. Yep, so here's the ultra bonds continuing to push lower. Just a lot of upward pressure on rates. So I think, you know, stocks should catch down to everything else because everything else is just already just making lower and lower lows, whereas stocks here are just kind of fighting it the longest. You know, we could see a, like I said at the start of the day, we could see a pretty good move down on ES today and NQ. So I think it could be a good day. Well, it is going to be a good day. I might have to pick a market that I trade and then bring out my one lower time period chart. So if you guys do that, what I'll do is if I close down the stream soon and I decide to trade, I'll keep an eye on the markets, but I will also, you know, if these are moving too fast and the higher time period volume-based chart is not giving me a chance to jump in, then say on ES, I'll bring a 20,000 volume chart, which is a multiple of 4, or sometimes I'll bring a multiple of 5, like a 16,500 chart. That'll sometimes, because then you get those micro pullbacks. Right now, the market is just looking like it's going to head lower. I'm going to have to be aggressive on getting in, I think. Here's a Russell. I'm trying to get picked up a little bit. Guess if the Russ could give us a little bit of a bounce. We'll get one. And I think what I'll do, guys, just because I got the COVID, I want to maintain my energy so I can keep going the rest of the week, is I'm going to go and just focus on my own trading right now. But you've got the analysis for the rest of the day. Just keep your eye on bonds. As long as they continue to drop, yields are pushing higher. As long as the dollar stays bid against the euro, I mean, just wait for pops. I think indices are headed a lot lower today. So just, you know, use whatever strategy you use to play the indices from the short side. I think you'll be in a good position. I hope that helps you guys. I'll be back tomorrow at 7:30, and as soon as I have more energy, you know, I'll be streaming longer and be much more actively trading. Just right now, I'm taking it slow with the COVID. So thanks a lot. Hope you got value out of this, and I'll see you guys tomorrow morning. And yeah, take care.